What if I told you you could get a copy of the Edge Finder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of Edge Finder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the Edge Finder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content. Good morning, guys. Welcome back to another live stream. Hope you're all doing well and hope you guys are ready for today's potential volatility with the CPI number coming out in about 10 minutes to go. Inflation statistics are definitely front and center to this market right now. And if you see it, I think you can see it on the screen right now. Should be this poll here showing up on our streaming software, which is pretty cool. Do you think CPI will be higher or lower than expected? Type 1 or 2 in the chat to cast your vote. Now, I think it is very text sensitive. Your message has to literally just be the number 1 or the number 2, nothing else within the message. Otherwise, it does not count towards the voting system. But if you want to partake, I thought that was cool. The software that we work in offers a poll system, and this is cool from us because if we do a poll just on where you're watching, like you might be watching on A1 Trading's YouTube, or you might be watching on my YouTube, or you might be watching on Twitter, or you might be watching, like we're streaming to a bunch of places. What's awesome about this software is that now we can have a polling system that is cross-platform and everyone can participate, whether you're on YouTube or which channel, whatever. So I thought that was really cool. Anyways, it seems like people are kind of leaning towards the idea that CPI will be hotter than expected this morning. So let's define what that means. Again, feel free to cast your vote as we discuss this. CPI is forecasted today, obviously, to make a big jump up to 3.4%. So why the big jump? Well, in case you guys have been living under a rock, and not Iraq, the country, but because Iran is actually, well, Iran is under Iraq. Am I right about that? Like Iraq is to the right and up. So I guess if you've been living under a rock, then you probably know what's going on, actually. Because obviously with the situation in the Middle East, the Strait of Hormuz closure has caused a challenging dynamic to global oil supply that even if the ceasefire holds and things proceed in a positive way, there's still some slowness to getting oil back into its normal routine flow. I also don't think anyone is naive enough to think that there's 100% certainty that nothing else is going to go wrong, that everything is going to be crystal clear, perfect from here, and everything will proceed as it was. Hopefully it does, but I think that, I think there's a good chance that you do have some false starts in the meantime. I got your under the rock joke. It was not intentional. That was kind of on the spot. I got to pat myself on the back for, I'm not a dad yet, but I guess I'm in training at that point. It's a pretty bad dad joke. But yes, I think in the meantime, you have CPI expectations to go higher today for good reason, right? Oil disruption is going to cause the price of everything else to react pretty quickly. When gas prices go up, so too does the cost of everything else, including services that are not necessary, like even digital service. Like things can go up in price very quickly if you have an energy cost shock. How do you think the stock market would react if we get a negative CPI for the dollar? Yeah, so if you have, let's say, a better than expected CPI, let's say it's 3.2, right, lower than expected, then that's not better than expected for dollar. Dollar would move lower likely on that scenario, and stocks would probably move higher. What would get the dollar to be strong today would be a higher than expected CPI print. If you had 3.5, 3.6% on the CPI, the dollar might actually move back higher. While the developing story seems to be ceasefire and a de-escalation, there are still other reasons that the dollar is strong. One of the big ones is, of course, the recent round of jobs data that has been really, really much better than expected. Now, I'm not saying it's a perfect jobs market out there, but it's definitely better than what economic forecasts had been looking at. But notice how Edgefinder has pretty much lost its bullish rating on dollar. Now, specifically, you can see we were bullish dollar for pretty much all of March, a chunk of February, and it was the right place to be. There was money to be made on the dollar long side in the last month and a half, which has been awesome. But at the end of the day, I'm not a perma anything. I'm not a perma bull on dollar. I'm not a perma bear on dollar. I think that's ignoring reality. The reality is it's a spectrum all the time, right? Things change. No one knows for certainty. Maybe the dollar is swinging back into bear case for a little while. Maybe that'll last a week, maybe a month, maybe 6 months. Maybe it lasts no time at all and we go back into bull territory. My goal as a trader is not to carry with me some kind of a perma bias on where I think something's going to go, but rather to adapt to what is in front of me now. With that said, institutions sold some dollar in the latest Commitment of Traders report. They have a neutral overall positioning with about 55% of their holdings on the long side and 45% on the short side. So mixed there. The chart has definitely changed directions, at least in like a 4-hour and daily chart trend perspective. We've met up that resistance at the 100.5 mark or so, and it seems to be holding for the bears. Meanwhile, seasonally, it is a weaker period of time for the dollar index. So I look at this and I say, okay, maybe we've had our fun with the dollar. I shorted Kiwi dollar several times. I shorted pound dollar. I shorted euro dollar. And I did okay with those trades. But it might be time. Well, it is time for me right now to put those ideas to rest. Now, I'm not going to reverse it and go long because I don't have a bearish reading on dollar, right? Still, the fundamentals look okay. Let me explain. Fundamental score, why is that getting a +4? Well, the jobs market data has been stronger than expected. However, weekly jobs claims did come in a little bit soft, but non-farm payroll, unemployment rate, ADP, these things came in better than expected. Meanwhile, we're about to get another reading that really matters on this list. The CPI is front and center today. If we get an inflation bias that ticks higher, right? Then that could keep this kind of a bullish fundamental score. If inflation is going to go on a run here to the upside, then I definitely do not want to get super bearish on the dollar, right? I don't want to lean into dollar bearishness if inflation is really rocketing higher. And we're going to get a little bit of confirmation on that because this CPI today does matter. It is showing the effects of oil price shocks in the month of March. Obviously, today we're in April. In April, we get the reported number for CPI for March. So we will get some interesting data in regards to inflation today with the CPI report, and it is expected to move markets. You are expected to get some volatility off of this. I also saw this morning, Ukraine and Russia maybe close to a deal. Hopefully so. We've seen that for, I don't know how many times I've read that type of headline though. So maybe not. We'll see. In the meantime, CPI is definitely front and center. What I'm going to do here is I'm going to switch over to what we call the all markets view so we can have an idea of how everything is moving this morning. So as we watch the release of the CPI report, we have stocks moving higher here this morning, at least going into the print. At the same time, you have dollar index softer this morning. You have gold kind of flat, silver kind of flat, oil somewhat flat as well. So we'll leave this up because this is are we on 1 hour time frames? We'll leave it at 1 hour time frames, and we'll watch to see if there's any significant moves one way or the other on this news release. So once you have this data in today, it does have potential to shift our bias on dollar. So let me be very clear that if you get something that is much softer than expected, let's say we get like a 3.2% inflation read. I think, what did we say we're expecting? 3.4. Is that right? 3.4. So if we got like a 3.2 or something, there is the possibility that with dollar, I actually flip more pessimistic on dollar. There is that possibility. There would also be a tailwind to equities, which I am already kind of looking for bullish setups on. So we'll see. I'm open-minded. I'm not, again, I follow macro trends. I follow technical trends. I don't make big predictions. I think that is a more silly way to approach the markets. I have no interest in debating. I have no interest in arguing or making the case for why I know that something is going to happen, but rather I try my best to just follow the trend and carefully choose to admit when I'm wrong. And that's it. Risk reward is all that matters. It is applying your idea to the market and then saying, I'm wrong here, or here's what I'm going to do if I'm right. And I know that is like oversimplified, but the reason I point that out is because most traders, I can't tell you how many times someone will comment something over and over, like gold needs to come down. And I pull up their past comments on my channel, and that's all they've said for a year straight. Gold needs to come down. Gold needs to come down. And I'm realizing that's a lot of people. A lot of people find themselves in the perma camp, right? They are always one way on a particular asset and ignorant to information that contradicts their point of view. And it gets them into trouble because at the end of the day, markets change, and open minds are going to do better in markets than closed minds, right? Like at the end of the day, there's times where I'm just so dead wrong. And the best thing I've ever done is learn to accept it quickly and to manage it. Leaving losers small is so underrated. It's unbelievable. Like if you can just leave them small, that's been a big thing for me. Like game changer over the years is leave losers small and let those winners run. At least in my my momentum trading strategy, which is kind of the primary thing that I look at. Anyway, CPI just dropped here. We have some movement. Let's take a look at what we've got. Stocks are higher, dollars lower. That's going to tell me that most likely that was a softer print for CPI, at least based on, yeah, there it is, 3.3%. So you did get a lower than expected read there on the CPI year over year, 3.3%. So that's good news, right? Considering we were expecting 3.4. Is this still an uptick in inflation? Yes, it is, right? Previous was 2.4. We jumped up to 3.3. But at least it wasn't worse than feared. And I think that's a big thing to note. Month over month CPI was at 0.9% rather than the 1% expected. Core CPI also rose by just 0.2% rather than 0.3% expected. That's a cool CPI print. We'll take that. Very nice. And let me see, in terms of, I am interested mostly right now in the equities market. And what this is going to do, let me think. This is going to be a -1 impact to the score here. So we'll be at -3 once this updates on US dollar. So again, for now, I'm going to put to rest the bull story. We had our fun, but for now, I'm going to stay neutral on dollar. But yes, a cool CPI print. That's going to actually help with some of the index readings, right? Inflation bias has been one of the holding us back components within scoring. But if we take a look at CPI, right, you take a look at CPI coming in neutral previously. Once this data updates within Edgefinder, it's going to actually be a cooler than expected print for CPI. And you might say, well, CPI went up. Well, yes, but markets already knew they were going up. The question today was, how much are they going up? How much is inflation going up? And the answer we got today was less than what people had expected. And so that is more dollar bearish. That is more gold bullish. It is more stocks bullish. And regardless of what the price action in like the next minutes looks like, I do think that generally speaking, that's going to lend towards a continued recovery in equities. You know, maybe some inflation not being too rough will be a good thing for equities. I would love a pullback. I'm going to complain about that. The longer this goes up, the more frustrated I'm going to become because I do want to buy it, but I want to wait for it. And I might not get it. So full transparency. Here's another scenario where I might even be right about the direction, thinking the equities market could continue higher, but never get involved because I missed. I mean, I bought stocks like individual companies. I've been playing. You know, I've even bought stocks again yesterday. Some of the software stuff that was down. But yes, equities market, I think path of least resistance is to continue the recovery. Obviously, the obvious statement in that is that if you get some sort of escalation again in the Middle East, ... you know the story. It blows everything out, and then we are back to, you know, a lower market. But I can't predict that. Right now, what I can look is I can say macro looks good for the most part. We aren't having crazy inflation. We're having decently strong economic reports. Jobs report was okay. I buy pullbacks here. That's my approach on this, and I do so sparingly and not full blown outright, you know, all in by any means. I'm still a little bit cautious on this market. You do still have oil near $100 a barrel, so we are not out of the woods here. But I think that there is some attractive risk reward in buying dips on equities, personally speaking. Okay, my friend Chris Pulver here is here to discuss this interesting CPI print this morning. A little cooler than expected, so we'll bring him into the conversation. Hey, by the way, if you guys are interested, as we do that, if you want to check out our Edgefinder discount, it is currently going on. We got a 40% off discount on the Edgefinder going on for a limited time. Take advantage of that discount. We'll drop a link here in the live stream chat to where you can speak directly to a member of our support staff and get that going so that you don't miss out on the sale. We'll bring in Chris Pulver here, see if we can see what he has to say. And hold on, I'll get it going here. Hold on 1 second, everyone. Where am I? Okay, there we go. Okay. Here he comes. Hey, Chris.
Good morning. Happy Friday.
Good morning. Hey, so good CPI print, at least better than what was forecast. We did get an uptick in inflation, but it was maybe a little bit more mild than what was feared here. Chris, can the rally keep going up?
I mean, clearly it is. I just think it's funny just pulling up the chart here for the week. All of the drama, all of the uncertainty, all the decline that's, you know, basically 6 out of 7 weeks bearish, 2 weeks, we're back to where we started. The market's flat for the entire year. It's just been drama, dude. I mean, you want to know who performed the best last year?
Who's
People that died or forgot their password. It's kind of the same thing this year. Like, just, you don't pay any attention. It's like the market's fine. So,
yeah, no, it is absolutely a weird dynamic how used to V-shaped recoveries this market has become. It's like you don't get if you hold your breath and miss the bottom, it's like you get no forgiveness. And I'm speaking from personal pain here because I want to buy, I want to be in there, but I don't want to chase. I will not chase. I mean, I know, you know, my strategy too well. I've got to wait for that pullback. And I think you still could get it, Chris. I mean, we're one post away. We know how this works.
Right.
But yeah, I think the market can move higher, but I will not chase it unless it comes to me.
That's super fair. I'm probably going to stick to the same thing as I did earlier in the year, which is, I mean, the one thing that is frustrating is how different premiums are with just the VIX dropping from like 25s to 20. I mean, the crazy part is we're at 19.2 VIX, which is still pretty elevated, but it is nowhere near what it was when you're getting those mid 20s, high 20 VIX premiums. Just those expected moves are so much further out. Those probability cones are much wider. So anyway, I mean, day to day is becoming a lot different. If I'm selling premium all the way back down to these April 2025 lows, it's not nearly the same. Also, I'm, at this point, I'm kind of fighting time because I'm not super bullish like long term. I think that right now I'd say we fixed a lot of the drama over the last 2 weeks. I still like the, April 2025 lows. But at this point, I think what I'm going to do here, Nick, is I might get a little bit more aggressive and start doing some trades that allow me to kind of pin the 6,000 handle. Because if we do end up heading lower and we go, let's draw this out here. If I went, let's say, high to low, I mean, we can go equal high to equal low and just have a range. We can obviously have a little bit of a broadening pattern as well. But if we go, let's say, lower high to lower low, I actually measured symmetry. So this would be lower high to lower low. I mean, 6,000 to me could be a correction area that I want to be buying from. That would allow you to get your pullback that you're looking for and waiting for. But we could also be sitting around waiting a lot longer for that too. I don't know. I think that 7,000's, what are we, within 2% of all-time highs? And it's right there. Just so we're knocking on all-time highs again. The market might get excited and celebrate it. I would be a little cautious of maybe the broadening pattern type look where it's like we tag the highs, get to like 7,100 and then roll back over. So just be prepared for a little bit of the market to do what you don't want it to do. Yeah. But I think you get your pullback that you want. Hopefully, what are you looking for? Like the 6,600-ish, 65.50 area?
I think I would take a stab at, well, let me see what my levels here are. If I go to I do like SPX. I also like NAS. 66.50, let's call it, somewhere in this 38.2 to 50% retracement. I think what I would do there, Chris, is I'd take a stab. And I'm not talking about like a, full port longs here. But I do think that there's, this type of approach where, and I call it I think you call it campaign too, but I use the word campaign to describe like when I'm going to try and take a directional play. Entries are hard as anything, right? Timing is very difficult. So what I'll do is probably do something like this, where I would take a stab at like 66.30 on SPX, a pullback there with some long side bias, looking for the continued recovery. Maybe we keep doing the V-shaped move. If that happens, I'd like to be there. And if I'm wrong, then I'll just cut the trade here, at which point I think from just a simple technician's perspective or like a technical analysis perspective, I think if you break that level, good chance you do go back and test those lows. I could reevaluate there if I want to take another stab at that side. Or to your point, maybe we zoom out a little bit on the weekly and we say, well, where could this thing go if those levels get violated at the lows? Which, again, I want to make clear, I don't think is the base case. I would like that to happen, to be completely honest, but I don't, this market just seems to want to rally now. If you do take that out, I mean, your next levels that I'm seeing here are the prior highs back in 2025, or I should say beginning of 2025. So I think that might be your next spot. If you were to violate these lows, would be a move down to this 38.2, maybe the 6,000 level even gets hit. So, we'll see what happens. I am kind of mildly bullish at this time, but I don't want to, I'm definitely not going to chase. And I do think, I think one area of pain for me, Chris, I want to get your thoughts on this. I'm not heavily exposed, but I have been doing some shopping in IGV, and to my fellow software stock friends out there, how bad are you bruised today? Because I'll tell you what, it is a pain trade out there. And you know what the most painful thing about software is you have this rip your face off rally happening in SPX and NAS, and software can't pick its face up off the ground. Like software is just getting beaten down at the expense of, semiconductors. And that story has been going on for a while, and it continues to go on. I mean, semiconductors are up 1% again here when we look at SMH. Chris, is software, if you're looking at this, I mean, I think you're more of a contrarian. So if you had to look between the two, would you also think maybe there's some deals out there on IGV, or would you rather just say, no, I'm staying with semis?
Well, I don't like the price of semis being popped up the way that they are. I don't want to chase that.
Sure.
The IGV stuff, I think that this is just the market's mood, which is, the saying is they throw the baby out with the bathwater, which is it's treating software like it's toxic. It's treating software like it's so disrupted. They're
Yes.
never going to be good companies ever again. They're going to bankruptcy. Like they're going to fail. That's what the market's pricing it like. So the reality is this is the hard part where, they say like, don't catch a falling knife, because I don't know where the bottom is. I mean,
Right.
honestly, if I were to look at IGV, I mean, I don't think the premiums are that good. I'd have to go to individual companies. But if
Mhm.
I looked at this low around $76 and I just started selling puts around 50, I mean, I'd be pretty confident that we wouldn't necessarily go all the way back down here, maybe by the end of the year. But Nick, I mean, in 2022, how bad were tech stops beat up?
Terrible.
Right. And how bad during a total deleveraging and into one like toxic section of the market, how badly can those stocks get beat up?
I mean, software could take a serious tumble. And
Right.
I'm telling you guys this, audience members, as someone who is long and short puts on a lot of different stocks. I mean, I have Intuit, which is in this category. I sold puts on ServiceNow. I rolled those, and those are still in the money. I'm short puts, so that's not good when they're in the money like that. When I shorted them initially out of the money, so
Mhm.
I'm taking on some damage there. I'm short puts on Salesforce. Yesterday, I shorted for the first time puts on Adobe, and it's either a value trap, Chris, or these are some decent prices right now, and we're gonna find out.
Yeah. I mean, looking at so SOXX, SMH, and then what was the other one? XOXL. That's
Mhm.
actually a leverage one. I
Mhm.
mean, the market's excited about something. I mean, XOXL was one of those that I was watching to see if there was a breakdown here. SOXX, which has more of the physical side of the semiconductors. Gosh, it's like we're at all-time highs again. So, yeah, I mean, software taking a beating. The scarcity side, I suppose, or the physical side of AI continues. It's just funny how much the market is like, yeah, oil's at $100, but who cares? Let's pump this thing.
Yeah.
And it's just I keep going back to this. It's like it is so difficult to be a bear and be right. I mean, look, man, I had synthetic long VIXs that I still didn't take profit on. Why? Because we didn't have a VIX event that I thought would have been worthy of like what
Mhm.
we saw in 2025, which was a 60
Sure.
VIX, which would
Yeah.
have paid very, very well. So the 30 VIX was not worth taking profit on. I mean, I've been synthetically long since 16 or 17. So I'll still make some profit on it at a 20 VIX, but it's like, man, if we had all-time highs and we're at 16, 17 VIX, it's a flat trade, which is fine. Obviously, the entire portfolio is benefiting from going up all of a sudden, but I still am happy that I de-risked. Somebody's asking earlier, how do we make fresh lows? I mean, it'd have to be the oil Middle East escalation story again, but
Yeah.
I think the market's going to try to do everything it can to just ignore it right now. I mean,
Yeah.
it seems like we're actually rallying on what is out there as like bad news and the market doesn't care. I mean, today's CPI print was pretty terrible. 3.3% compared to the last previous CPI. It's like that's a terrible print.
Yeah.
When the Fed's been talking about headline inflation at 2%, we are so far away from it now. But the market's going to probably spin it as like, well, it's a one-time, 1-month oil shock, and it's all going to go back to normal. We'll see.
Yeah.
But market loves it right now.
Let's inspect some of those points that you made there, Chris. I'm just going to flip through some charts for us
Yeah.
on my side.
Yeah.
So you mentioned the question you received from a viewer, from a member, in regards to what gets this market to do that move that we talked about. Like if we're going to make a leg lower, I'll tell you what, I've got my answer at the end, but I'll just show you a couple quick charts. Here's dollar index. Let's take a look at the technical side, and we can point out the technicals on dollar have broken here, at least in the short term.
Mhm.
I think to the downside. This clear and obvious, escalation trade plus higher interest rates trade, I think has, at least for now, cooled off. I think the dollar could go sideways here. I don't know that we necessarily have the basis for dollar to plummet from here, but I think dollar kind of trades sideways. That would be my bias on this, in the here and now. The VIX has cracked, right? That's helping the equities rally, as you've got, at least for now, a little bit of softness in the volatility index, though you're still hovering around 20. You're not low teens. You're just below 20. That could, at any social media post that comes out, could spike back up. And then oil, to your point, still elevated here, right? So there are some things brewing that I think are, you can't just say, we're all clear, we're all good, because the markets disagree with that theory.
Right.
You have oil still around $100 a barrel. That is showing this, while today's CPI print, yes, it did jump higher. It was a little bit better than expected, but what matters most is, where is oil a month from now? If we are still around here, we got problems, because then, that is going to start it's going to entrench, that inflation is going to entrench a little bit more into the economy. And then let's look at one more chart here, and that's going to be the 10-year yield. 10-year yield come down a little bit, but not too much. We're still looking at an elevated 10-year yield, and we've talked about this story for a long time. Yields have not gone anywhere in years. Since all of this story, right, all this inflation stuff, guys, we're trading at the same 10-year yield that we were in October of 2022. We have not seen despite all the hype around rate cuts, et cetera, the market is still thinking inflation is going to be structurally higher for the longer term. That's what the 10-year yield is saying here. At least the way I'm reading it. Ask 50 different bond traders what it's saying, and you'll get 50 different answers. But my theory is that it's saying inflation is still expected to remain high. And so all of that to say, to answer the question, you still have some challenges on some of those charts we just got done discussing. But the one thing I would say that maybe is a catalyst here for another leg lower is seasonality in regards to midterm election years. We came into this year pointing this out. A lot of times there are jolts to the downside during the years of midterm election years. In fact, I think on a historical basis, it has a very underperforming type of year is midterm election years, as a lot of drama goes on and a lot of uncertainty about what fiscal stuff will look like. So I don't know, Chris, do you think that has any potential with midterm elections coming up? I'm sure that's going to turn into a big debate about, should we have not done, this with Iran and inflation, and all this stuff is probably coming back.
I think of it, clearly the midterm elections will matter this year. I just think that from Trump's vantage point, if the markets are at all-time highs, he's got a fighting chance. If the markets are back down to, testing those lows, or we're at a 10+% correction, I don't think he has any chance with midterms, unless we're in a state of emergency and wartime stuff, which might be this whole plan all along is, let's make everyone scared and through their minds with like, why would you switch administrations on me when, all this stuff is going on in the Middle East? Anyway, it's a scorecard piece for him. And the 10%, we said that was kind of the Trump line in the sand. The one thing I have noticed just in the last couple of weeks is market breadth has come back in a pretty big way. This is outside of software, outside of IGV, market breadth has actually come back in a pretty big way. I was actually watching this with alarms set. This is S5FI, which is the market breadth indicator for how many stocks in the S&P are above the 50-day moving average. And we were down to about 17.5. This was one of my perfect timing indicators for 2025. Although it was like you're buying essentially in the heat of all the red, worked out great. Same thing here. It's like 17.5 was not quite enough of a signal for me to get down to the low, 11 or 12 or 10. So I didn't just outright buy the indexes. But looking at going from a 17.5% to now almost 50% of stocks back above the 50-day moving average, that's a big return. Also a big jump in the, where the heck did it go? The one that's above the, let's go here. It should be on my watch list there. So big return above the 50-day moving average, and then also a big jump above the 200-day. So we went from 42% of stocks above a 200-day to now over 55% of stocks above a 200-day. So that big rip we've seen just in the last couple of days has allowed the market to kind of reestablish a pretty strong, everything's okay, broader market is above a buy zone now. And I think that positive, again, I look at this from a zero DT spec perspective because it's so popular now with option trading. Those flows will favor positive gamma until they don't. And so this is why I don't think it's something we should fight. I think this drift continues. If we turn hard, like today, for example, if we fade this entire, we're not up a ton today, but if we fade basically almost 3%, if we fade almost a 3% move next week, but we have earnings next week. And if the bar set pretty low, it's like, what are financials doing? That was one sector that was hit pretty hard. If we lead off next week with JP Morgan, Wells Fargo, Bank of America, Goldman Sachs, and they are up in XLF recovers, dude, I think we're right back where we started. We've got financials looking strong. The market's going to look over all the drama, all the noise, and just kind of pump in to say, hey, earnings are fine. And if earnings are fine, the Fed's not going to do anything to disrupt this. And don't fight it, man. Don't fight the tide. I guess it's just a big switch. It's a big switch from last week to this week.
Yep. No, you certainly can't. You can't fight the tape. That's the old expression. And we'll see how everything plays out. I will stick to my guns in the sense that if I am going to be a buyer, I've got to wait for some kind of constructive pullback on this. Chris, what about commodities? Is there anything interesting to you? Silver and gold feel just like asleep at the wheel recently.
They should be.
Yeah.
I mean, what they've done the last 3-4 years has been remarkable, and they should bore people to death right now, which is fine because I'm going to use it as a chance to accumulate and just do like an unassuming, allocation, be long, be out of the way, don't care about it. I'm pretty time insensitive to gold and silver. I was kind of rewarded for the strained patience of watching this thing go up, and I'm like, all right, well, I'm just glad I didn't buy into that. So anyway, when the market did dip, here's my GLD buy-ins. So I got a couple decent levels. I mean, the yellow lines here, I bought near the highs. Like when we first had that dip on the day, it's like I bought that low, and we obviously sold off. I'm still watching this thing to hit the 200-day moving average. But from there, I've got lots of puts, lots of ratio spreads. I will also, go synthetically long to trade the option side and have like that, 100+ share exposure. But it's also time insensitive for me. If I'm going to be long anything for the next 3, 4, 5 years, I think gold, even getting back to these highs, that's probably my next question on gold and silver is, let's say that gold, stumbles around here and it gets really boring and nobody cares anymore, but I do. I don't think that central banks are stopping. I think that there's still going to be an automatic bid in gold. I don't think they're going to change their plans for hoarding or accumulating more gold to do what? What are they going to do with it? Are they going to buy more dollars? It's like nobody wants to buy more dollars at this point. I mean, that's what the whole friction is in the global economy. So I think there's a stable bid in gold. I think silver became an interesting story because it's no longer just an industrial metal. Now it's strategic. Now there's the AI use case for it. So anyway, my point is, if I'm buying off these pullbacks and we do get back to these highs, Nick, is that a good enough trade for you to say I'm going to let that go and be done with it as like, hey, good trade. That was a 2026 buy the dip and then I get out whenever it hits all-time highs? Or are you like longer term keeping gold in the portfolio, letting this thing run to see if we go to crazy highs again?
Yeah, so I think in terms of, I have two sides of stuff. I have like simultaneously longer term stuff that I'm playing and then shorter term trades.
Mm-hmm.
In terms of shorter term trades on gold, I'm like super bored to tears with it, like you pointed out.
Right.
From a longer term perspective, I would love to, if you had another leg lower. I know you're kind of doing the dollar cost averaging approach, building into it. What I'd probably like to do, to be honest, is actually I'd love to sell some puts on like GDX, for example. Get some gold miners in there, maybe also do GLD. And I played short puts once already with GLD, so I wouldn't mind getting some ownership and just kind of sitting on it, and playing that if you can get another pullback into this 200-day moving average. I do think that is a good spot in my own account. I'm going to probably add some longer term gold, precious metals, and sit on it, just because again I think that you have lost at least the trader's story of the last 2 years, which has been interest rate cuts, inflation cooling. But as an investor, I'm definitely more contrarian. As a trader, I'm super, I want to follow the macro that's happening right now. I want to ride that for a while I can, and then I'm out of there as fast as possible when it changes.
Mm-hmm.
And I feel that I've done a decently good job with that. I did not partake in any of this fall apart because once it started, I was gone, right? No bullish trades for me on the shorter term basis. From a longer term perspective, though, I'm definitely more of a contrarian when it comes to holding on to stuff. So if you had gold shoot a leg lower, then I think that a Chris Pulver campaign trade makes a lot of sense, where I could build a position and I could sit on it for a while, and then when the time comes again, maybe the jobs market starts falling apart, maybe inflation starts cooling down, maybe some new geopolitical thing we're not thinking of starts to take place, and gold is a safe haven. And maybe during that next geopolitical event, oil is not, spiking dramatically and kind of killing the story for gold, which was very confusing for a lot of gold traders, gold investors. They're like, how's gold going down on a war breakout? And we talked a lot about it, but you know, I think gold from a longer term perspective, from a more passive, no leverage, let it sit there perspective, I like the 200-day moving average. That, to answer your question, would I take profits right at the top? Probably not. It would depend for me on a longer term basis. My exit indicator would be probably a mix of, extreme overbought readings, but also I'd have to see some sort of shift in the macro story that would be no longer attractive to me on gold to get out.
I've got a trade. So it's a
Okay.
little bit longer, but if I went GDX, I can do a ratio spread 70 by 60. Still get a couple $100 for it. Let's say the fill's like 225 to 230. Not a bad trade. It's a little income trade. I'd set aside on a cash account about $4,700, which wouldn't be terrible. I mean, getting $200 out of that, it's like making 5%. But the portfolio margin buying power is only like $770. So if I can make 225 out of 770, that's not bad. If I own shares of GDX, my break-even price, if I'm just going to assume I get filled like 225. So assignment at 60 minus the profit trap and the 225 credit, I'd own GDX at 47.75, which is more than 50% lower than current prices.
Yes.
So if there's a stable bid on gold, that's not a bad way to play it. It's obviously a lot cheaper than owning GLD. And let there be noise, but there's time in this trade. There's decent premium, and I wouldn't mind picking up some shares at $47. If you look at the chart, that's way down here, man. I mean that's probably like 70% of this rally is going to have to be taken back, and I feel like there's probably a decent bid there from previous all-time highs around $47. That's literally this breakout from COVID. That resistance area would be where I own the shares. So we probably won't even get assigned on it. That's the nice part. It's just a little income trade. But that's kind of my safety blanket for a lot of trades in 2026, which is like, I just want to be out of the way. I don't really want a bunch of assignments. I just want give me $200. Let me take 1,000 trades and I'll do fine.
Yeah. And I'm going to explain your trade there, Chris, because I think it's fun to do so. And also I think it might be good for people who are newer to the options side. So check this out. What Chris just explained with the ratio spread there, he's talking about with GDX, and I'm explaining it for you, Chris, so that you can correct me if I make any wrong statements. I want to understand what you said too. So you're talking about buying one put that is at $70 strike price, out of the money, obviously, from where we currently trade, right? So for options traders, for new options traders, if you've never traded options, I'm going to try and keep this simple. Basically, you pay to buy a put, a debit, like it costs you something to buy that put in exchange for the right to sell shares no matter what at $70 per share over here. But then it's simultaneously, while buying a put, which is a bearish bet, you sell two puts, right? So you sell two puts further out of the money at $60 per share. So if the stock price were to trade anywhere around here, the result would be that these two sell puts would outweigh the credit that you paid. So you would lose money on this. Let's say, I'm just putting out a number. Let's say you put 1 and then you make 1.25. You overall would make the 25-cent max profit if the stock or GDX didn't go anywhere. The idea with the ratio spread, generally speaking, is you benefit from sideways price action, upward price action, slightly lower. The only scenario in which you potentially, as you pointed out, take assignment is if it were to crater. And the credit, when you talked about getting down to like what, 47.5?
47.75, yeah.
Yeah, so right there, you're talking about like the net result of all of these options trades, the credit that you received would get you an average share price all the way down here, even if you did get assigned. It kind of puts you in this situation in which almost all scenarios you make money. Of course, there's risk as always, but it gives you a very high probability trade.
Agree. And I call the ratio spread better than Buffett, because I know that he is notorious for sitting on the sidelines, getting in these big corrections, but also doing lots of cash secured puts. That's fine. But if I did a cash secured put on that position, I would get $2.82, which is great. I make an extra $50, but I also would own shares around $57 if I was assigned versus $47 with my ratio spread. So I can own the shares much lower. I get a profit trap. And what's nice about this is, when I first started trading options back in the day, it was always kind of weird to look and see like what those risk graphs look like. So I'm going to build this out for everybody before we go here. Let me go GDX. So this is like the furthest expiration I have. It's all the way out to 2028. But if I were to buy the 70 and then sell to it the 60, this is what the trade actually looks like. So there is zero risk to sideways GDX. There's zero risk to up GDX. And there is zero risk if the market is going to stay. I mean, essentially, we have from current price down to about $70. The GDX could fall almost 30% before I really have any real risk. And that's why I build out this trade where this profit trap can kick in as we get closer to expiration. If we're trading at $70, 70 to 69 to 68 to 67, this thing is perfectly pinned at $60, which gives me a potential bonus profit of $1,000.
Yep.
So in an ideal situation, we do press down to like $65 or $60. And guess what that means for me? I get an extra $500 to $1,000 on top of my $225, and I still don't take any assignment.
Yep.
So,
exactly.
But if it just goes up, I'll just make $250 and walk away happy, whatever.
And a couple people commenting, this sounds like riddles, sounds complicated. It is and it isn't. It sounds more complicated than it is. Options is definitely not for everyone. I understand that. But it is kind of the market maker's game, right? You can make a lot of, you can make a lot of mistakes and still do okay based on, like I could be dead wrong in timing on something and still do okay with options. And that's kind of the cool thing about it. Gives you, you're not subject to, I have to be right in direction right now, otherwise I don't make money. That's a lot of pressure. And for options traders, the beauty is the market could go sideways. It could go up a little bit, it could go down a little bit. In most scenarios, you actually walk away with a profit, which is attractive to traders like Chris, myself, and many others. But there is a learning curve. So, I want to do a little bit of options education here on that Friday. Chris, we're out of time. We're over time here. Thanks as always for your commentary this week. It was a good one. And we'll, I'm sure, be back for another one soon.
For sure. And also for the options education, remember with Pulver Alerts, you've got about 4 hours of options education as a foundation. So if anybody's like, that's Greek to me, we'll learn how to trade it, because I'd make it as simple. Like imagine Nick's example, 4 hours of that.
Yes.
It's like, that's how simple and broken down it is. That's why I call it practical options, because it's like, there's a lot of jargon and vocabulary that people have to be intimidated by. I try not to make it that. It's like, just understand what you're doing as far as like, do I want to be directional or not? I'm trading price and time and volatility. That's it. So I try to make it as simple as possible.
If you guys are in the Discord right here, Pulver Alerts Trades, go to the Practical Options course. It is a 4-hour video, wealth of knowledge. Chris, you are a madman for recording that in one shot. I watched it and I was like, this man, Chris, I don't think you're human, man. I think you're 4 hours of just like raw, excellent educational content. It was powerful.
Just a regular day, in the office here.
It is for you, man. You're crazy.
All right.
Awesome.
Thanks.
Yeah.
Happy
guys,
Masters
definitely
week.
check it out. See you, Chris. Thanks for coming on, man.
See you.
And yes, if you're interested in the Pulver Alerts, that is something that you can take advantage of. Chris is an excellent educator in the options world, and he is a pro in this stuff. So if you want to check him out, the Pulver Alerts, click the link. We'll drop it in the live stream chat to where you can speak directly to our team if you want to set up Pulver Alerts, or if you want to take advantage of our 40% off discount going on right now for Edge Finder. So don't miss your chance. Everything is on super sale right now. And we'll extend that out to the Pulver Alerts. If you want to join us for options trading, Chris and I are avid options traders. Chris definitely knows a lot more than I do, but just it's a spot to play options. If you want to learn stuff, Chris is the guy. So with that said, guys, I'm going to throw the show over to our next show host and stay tuned on that right after this quick break. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across, with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader, all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently, with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like $5 all the way to $200. 100K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Friday. It's going to be a great day by default. Hope you guys didn't miss me too much yesterday. I was finally in a position to get some onboarding with my new role I've got. I learned about weeks worth of stuff in about 2.5 hours. So needless to say, my brain was cramped, and I totally forgot to set my alarm this morning. So I actually got up a little late. Shh, don't tell anybody. But anyway, it's a good day. Really cool stuff. I don't think I'll anticipate any more hiccups in my streaming slots. But as always, guys, just throw in any tickers that you have. I did write down a couple notes here, and if you have any tickers, I'll be happy to take a look at them as well. Yeah, Matthew, I was here. I was onboarding with my guy in Tel Aviv. So poor guy just had a baby, and they keep getting cluster bombs dropped in their neighborhood. So I hadn't had a real chance to onboard with him correctly and learn some of these editing software programs and uploading social software. So finally had a chance to do it. We're good to go now. So that's where I was at. Vice President Vance is supposed to meet up in Islamabad with Kushner and Witkoff to cuss and discuss, if you will, the truce, and see if they can't get to a better place with this shaky ceasefire that we've got going on. I feel like it's probably a little bit of a smart move to send the vice president, because he's definitely a little cooler, a little calmer, not as much of a hothead as Trump is. So hopefully that can turn into something that's a little more stable for us, because we're definitely seeing the shakiness of the ceasefire, in my opinion, in just about all the charts. Okay, just taking a look at all the, some of the top markets, like I like to do for my other position. Everything's just going straight sideways. Now, the volatility index, let me just go to a 1 chart look real quick. The volatility index, despite the shakiness, is still getting a little less volatile, a little bit more. Okay, we did finally crack the 20 level, which is nice to see. Taking a look at the Dixie. Okay, it's you would think that the Dixie, the dollar index, is probably going to start weakening. I mean, the ceasefire itself added a lot of weakness to it, because remember, the dollar, for better or for worse, benefits from the war. Okay, it's kind of a slimy thing to say, but that's just kind of the reality of it. So between that and the fact that we did have some not so good data yesterday for the dollar, it's actually dropped back to 54%. So even though it remains the top currency of the 8 major currencies, it is definitely weakened. We did see that GDP number come down yesterday. We saw the Fed's favorite gauge of inflation, the PCE, get a neutral rating, but also we saw the jobless claims spike by about 9,000 jobless claims. So not the greatest look for the Dixie. Again, it is at 54%. And if we take a look at the surprise index overall, you can see that we're pretty well clustered here in the middle. Okay, there's your dollar. These light blue numbers, to me, they're just a little on the neutral side. There's no real strong reason to buy or sell this. There's really only 3 items, I guess. 2 items, in my opinion, worth like really forcefully pushing for, and that's the Aussie Kiwi shorts. Now the Edge Finder has quite a few bullish British pound pairs on here, but again, it's a 40%. So this is just one piece of that 3-legged stool that we talk about when it comes to fundamental sentiment, technical analysis, but is definitely probably one of the most important parts. So Overall, we have economic underperformance when we're just looking at the 8 majors. If by the time you add everything up, it's going to be below 50. So kind of that 50 baseline I like to look at. So yeah, it's just further proof that we're just in wait and see mode on this stuff. So taking a look at the edge finder again, we still have quite a few British pound pairs on here: pound Kiwi, pound CAD, pound Swiss, and pound yen for possible buys. We're down to slim pickings, guys. Remember, this list was over twice as long just a couple short days ago, but since the ceasefire, everything's kind of came back to the middle, so to speak. So that's where we stand. Let me take a look at my chat real quick. Aussie yen, or I'm sorry, Aussie Kiwi. Yeah, let's take a look at that. And let's see here. A pound Aussie for sure. So yeah, let's go look at Aussie Kiwi Aussie Kiwi first. So plus 12, guys. This is currently our strongest one. So let's see if we can't find any demand zones for possible buys. Now we are in Friday, so like I tell you guys every Friday, and really on Thursdays even, I try hard not to get in any higher, like my normal 4-hour, 1-hour zone trades on Fridays, because it's probably not going to be enough time for the average true range, of that asset to potentially push it towards my take profit by the end of the day, unless we obviously have some big spike in the ceasefire, which likely won't happen since we do have those the cussing and discussing going on this weekend. But yeah, just never know. We still got to be prepared for it. So I'll probably look at these setups more so for Monday and beyond. As far as Aussie Kiwi, though, we did recently, recently bounced into this overhead supply zone. And guys, remember, I think I mentioned this was from way back in 2014, where this thing was formed. So long time ago. Yeah, we're talking about right in here, guys, April of 2013, rather. And again, guys, this could be a hot take, but a lot of people say that these things expire after a certain period of time. I don't think so. I really don't think so at all. I see these things bounce all the time. So it is a little clustery, and I'm not trying to short this asset. We're obviously trying to buy it, but I just want to be aware that we did bounce into a zone where we had a gap down, a gap down showing that supply way back here, yes, in 2013 heavily exceeded demand, and we created an inefficiency in the market. So that's where we did recently bounce into. So if I'm looking at swing highs and swing lows, just getting into a daily time frame here, obviously I'd be wanting to look at this swing low here, this swing high here, and just block it out into my thirds like I like to do, guys, showing me where the middle is, the discount, the premium is, and currently we're diddling in the middle, right? So I just want to be aware of that for Aussie Kiwi, and then start breaking down into some smaller time frames, see if we can't find any zones. So there immediately pops up one on here, but there's really no gap to speak of. So from a 4-hour perspective, not interested. I'd have to break it down a little further to see if the picture gets any prettier. Going a little deeper, though, there's a little bit of a zone here we could keep an eye on. Aussie Kiwi, I do believe, is one of the slower moving pairs. I think it only moves about 60 pips. Let me double check that. ATR 641. So yeah, 64 pips. So 8 is above 21. I like that on the daily. I got higher highs and higher lows, clearly. But again, we did bounce into that overhead supply. So I have drawn up the one I just drew up. So this is clearly the discount zone, guys. I talk about the discount zone. We are obviously in the retail chop areas. So let's just drop it down just for the fun of it and see what I drew up. So I drew up a 2-hour zone all the way down here, but how many candles are to the left? A lot. Okay. So if I'm a bank, if I'm a hedge fund, if I'm trying to accumulate a position to push this thing up, that's probably 2 days. That's probably a lot of time to be able to, on that time frame, potentially accumulate the position I want. So in other words, it didn't spend very much. It spent a lot of time there is what I'm trying to say. Okay. So probably not as interested in that zone because of that. I would definitely want to go smaller or lower, I should say, to see what I find. So yeah, if we just go down to the discount zone, I think the best look so far is probably going to be this particular zone here. But again, it's just like this one up here. Really not much there's really not much of a gap, really not much of an inefficiency. There is an inefficiency, just not one I like, just not a strong one like I like to see. Although it did break this kind of triple top up here, break some structures that kept going. So, yeah, that's about as good as I can give you on that. I mean, I do have a much better looking zone further down. So if we were to look at that zone, and now we're getting a ways away, guys, we're talking 100 plus pips away. So this one would probably take at least a couple of days to get down there. If it does, it probably won't because it is so strong. But we've basically got a fight going on. We got the fundamentals and the sentiment telling us, let's go out and buy this thing. But we have a brick wall in the form of that overhead supply that we bounced into. So perhaps if we come all the way down to this level here, we could take advantage of this liquidity because all these buyers stepped in and pushed price up. And where'd they put their stop losses? Down here, okay? Down in this area. So there's definitely going to be some liquidity down here. So if I were to have some patience, if we were to have some patience, then we could possibly look to obviously have a drop through all this nonsense because it is, relatively higher up on the overall curve, I should say. But if we break and collect this liquidity, we do have a demand zone all the way down here. Okay. So that is a possible play. Basically the 1.19 level, I guess you could call it. So it is a round number just ahead of it. As always, guys, when you get price bouncing into a round number, you're going to just by default have buyers and sellers just because it touched that zone. So when they buy in this instance, they're going to be putting their stop losses further down. The banks know that, and they're going to go attack it, okay, to fuel their orders to take price up. So that's a long-winded way of kind of answering that, but even though the structure looks nice, I just don't like how weak a lot of these zones in here look. So I would be very, very strict on, for me personally, my odds enhancers, RSI, moving average crossover, 50 above the 200, bullish engulfing candle, okay? And then not to mention my volume spread analysis candle spikes. So probably going to be better items out there for that. And also Aussie, remember, if we're trying to buy the Aussie, again, going back to the most important of the three-legged stool we call analysis, the Aussie has only given us a 33% forecast to beat strength on the index. So, yeah, that's kind of what Aussie Kiwi looks like in my head. That might sound a little complicated to a lot of you, but that's about the best I can do right now. Let's see here, 1 hour. Yeah, that's just too much time spent right there. So I probably would just ignore this zone right here, guys. Kirthan, I'm having a great day. Let's take a look at your pound Aussie. And we'll take a look at the score one more time. Pound Aussie, pound Aussie, pound Aussie. Oh, that one's off the list. So let's go to my neutral list and see what we're looking at. Where is pound Aussie? Where is pound Aussie? Do I need to refresh my list? Yeah, must be up there. I just missed it. Pound Aussie. I don't see pound Aussie. Where's it at? Where is pound Aussie? Go add everything together. Where's pound Aussie? Is it hiding from me? Oh, it's down here in neutral. Okay, so +2. So let's go look at the text for you. Pound Aussie, pound Aussie. Okay, so 8 is below the 21 over here on the daily chart, showing some recent bearishness. And the same rings true for my 50 and my 200 on my my action time frame over here. So if we're just by itself isolating the technicals, well, you would probably be looking for a short. Okay, this is notwithstanding the fundamentals and the sentiment. I'm just strictly talking about the technicals here. Let's go see what a 2 hour looks like. 4 hour. Yeah. I mean, about the best I could come up with would be a supply right in this area on a 4 hour. It is also bouncing into a a former resistance support line, that blue dash line right there from way back here. Okay. Early mid-February. And it looks like it got respected a few times. There's a wick right here. There's a wick right here. There's a bunch of wicks and candles here before price pushed down. So it was support for a minute, and then it turned into some pretty decently strong resistance. So is it going to continue that resistance train? Possibly. We got a supply zone there. Now, how can I tear this to pieces? Because you guys know I like to trust but verify, and I try to see the this may sound negative, guys, but I want to see what's the negative parts first. Because if I get one or two negative bits in it, then I'm probably just going to ignore it. So it depends on which structure you want to see broken. If we're looking at this swing low, okay, we beat it. If you're looking at this structure down here, we obviously haven't gotten down to it. So I guess that this would probably qualify as a structural beat, a broken structure. Well, I just feel like it's probably a little more minor of a structure than this one down here. This is a major structure. Okay, this had the strength to push price up and break some of these structures up here. So this one though hasn't broken any structures. Okay, this structure did not break this structure. So that's why I say this is a little bit of a minor structure beat breaking. Okay, now I love that it has a whole bunch of red candles coming out of it. Okay, and especially if I go up to the 4-hour chart look that I was at. So we've got a really nice gap. So here's our gap right here, guys. Let me just draw it in so you can see it real quick. Okay, there's our fair value gap, runaway gap, acceleration gap, whatever term you want to give to it, showing inefficiency, showing supply heavily exceeded demand, and we got a big push down. So technically, okay, if you were to put your blinders on and ignore the fundamentals and the sentiment, then that could be a decent looking short opportunity, assuming my other odds enhancers come into fruition. Okay, things like RSI going to, for me, an 80 level, showing it's heavily overbought, and then keeping our 50 under our 200, which is looking nice on the 1 hour. But I would really want to see, what I would really want to see on this is for my 200 EMA just to continue its little trek downwards like that. And then I want price to kind of bounce into that 200 as well. If it can intersect that 200 on its way up, and then we get a bearish engulfing candle with some volume spread analysis picking up, that might be a good opportunity. But that's just the technicals. Okay, it's not on our bullish or bearish list. In fact, it's a neutral 2 right now. So there's your technical look at pound Aussie. La, 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 la. Zeus, let's look at some dollar CAD for you. Dollar CAD. Yeah, we've lost all of our dollar pairs, best I can remember. Let me get rid of my neutrals again. Yeah, pretty much lost all that. So the dollar went to neutral land. Dollar CAD is obviously going to be neutral, but we'll take a peek on it for you here. Okay, so my 8 remains above my 21 over here on the daily. So that's still bullish, even though the last week or so we've had a big retracement downwards, which makes sense because that's coming from the ceasefire tease, if you will. And like I was putting into my morning video today for my company, the ceasefire, a lot of people mistaken that for a deal. It's not a deal. The ceasefire is just a pause in fighting to get to a deal. So, Vice President Vance has a huge job this weekend in Islamabad. And he does like to cuss. So when I say cuss and discuss, he quite literally will probably be cussing at him. So, but not to the extent that I think Trump would be doing it. So we'll see. Hopefully that can, come into fruition in a good way. But let's take a look at your technicals here for you. Yeah, this is a similar picture to what we just looked at in Aussie Kiwi. I mean, it's a nice move up, but we bounced into an overhead supply. Okay, talking about this daily, and that's partly why we're getting rejection and pushing down. Not to mention the ceasefire. But we do have some zones in here, but I don't like them because there's no real gaps. I mean, there's like microscopic gaps. If I go to the origin of the overall strong move down here, looks like I did draw one up on probably an hourly. Oh, let's go double check that. So it's even smaller. So I think this one might have been like a 15. But one thing I like about this origin of this strong move up is the fact that we had a lot of volume of volume spread analysis movements. Okay, some red candles, but they were, in all fairness, a little further back. So if we're looking at the spot where price moved up, yeah, the volume was okay, but it was starting to dissipate. So I got to be honest. Assuming we had a bullish move, a bullish signal, which we don't, I still probably would even not be excited about that, because by the time price would come down here, well, then our 50 EMA would likely cross back over, and that would be a no-no for me. All right. If we get a crossover like that ixnays my trade idea, just because, partly because of that. But RSI looks good. I mean, it's going into oversold territory, which I would want to see, but yuck, I don't like it. I just don't like it. Kiwi dollar, Jeremy. Okay. Yeah, let's do that. And then I got a few minutes left. Before I do forget, though, guys, definitely, if you haven't already, go check out olaprime.com. Nick's got a 35% off code for you if you look for a new prop firm. Got a QR code on there as well. Reach out to me at Trade Like a Tiger on all the socials if you have any questions on that. Again, I worked with them for a while, helped them out with the rules and coaching and one-on-ones and live streaming and everything. So really cool company. Let me know, guys, if you have any questions on that. James will be on right after me, so I'll squeeze this part out real quick for the Kiwi dollar. Yeah, needless to say, guys, I'm not in any trades right now. I was just in that 1 pound CAD long position that I profited on nicely. And yeah, I've just been in wait and see mode, just like probably most of the market myself. I just haven't seen any really good zones be tapped into or even created. Like we've seen on these, 2 or 3 assets so far, they're just puny. There's no strong zones in here. They're just nothing more than a temporary pauses on the way up and down that just haven't been strong. So let's take a look at Kiwi dollar for you, and we'll probably end it on that. My 8 remains below the 21 over here. We did obviously have the big retracement due to dollar weakness from the ceasefire, as well as the fundamentals that have come out lately that are not good. So obviously we are at neutral, but let's just pretend we had a bearish signal still, just for the sake of the exercise. I do still have a daily supply zone overhead. That's this yellow box. And over here on the left side where my 4-hour chart is, So I did have this 4-hour zone that I drawed up. So nothing's changed, guys. And I think I even went through this yesterday or the day before. We do have a 4-hour zone kind of half in and half out of this daily. But remember, it's already been mitigated. Okay. We've already been wicked into. Not much, just enough to make me want to color this box light red as opposed to dark red. Okay. Showing that there's something a little sketchy about it. So I would personally, okay, just assuming we still had that bearish signal, I would wait for price personally to bounce into the daily. So let's ignore the 4-hour itself, and let's get up here where the 4-hour is starting to intersect with the daily. That would be my first interest. And who knows, this thing may still flip back neutral or back bearish. If it does, I've got a zone waiting on it. This is why I say, guys, even when stuff falls off the list on the edge finder to neutral, I still want to maintain my alerts just in case. Okay. So I've got an alert set at that 4-hour, but the reality is, and you can see that white dashed line hiding, that's actually where a smaller 1-hour zone is confluenced in with the daily. So that would be my technical setup, and then, see how far down we could take this thing. Because if we could break this structure right here, assuming we were in a trade, well, we got quite the waterfall from all this up candle here. Okay, waterfall down to demand at the bottom. So that's about the best I can do for you on that. Again, it's neutral. It's Friday. And last thing, guys, I did see one last headline, and that was, and again, it's not set in stone. It's not hard data. But President Zelensky's top aide thinks that Russia and Ukraine can have a deal fairly soon. That was their words. So it's hearsay. It is, at this point, opinion. It's not set in stone, just like our deal in the U.S. and Iran is not set in stone. But it is nice to hear that. And when that came out, Dixie dropped, oil dropped, S&P flew up on a 5-minute chart. So it was nice to see that. But yeah, everybody's forgotten about the Ukraine-Russia war, obviously, over the last month plus because of the Iran conflict. But it was just nice to see at least something positive come out. Come on. Let's end all these wars, ladies and gents. I'm going to pass you on over to, I do believe Jaime is coming up. So with that, have a wonderful day. Hope you guys stay safe, and I'll be back on Monday. Peace out.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello. Happy Friday, everyone. Hope you're well. Hope you're all having a fantastic week, or had a fantastic week, I should say, and you got some exciting plans for the weekend. So, what are we looking at today? Not too much for me personally, anyway. So, watch list remains completely empty. In terms of open positions, I am in the Aussie New Zealand. I took a scale in yesterday. Was it yesterday or today? I can't remember actually. Yeah, yesterday I took an additional position. Following pretty much the same rules I always do. Obviously, we have the bullish trend. We had moved to the upside. We drew the fib from the high to the low. This was our initial entry. We broke below the fib, ended up pushing back up. This was the trigger to go long, ended up having consolidation. 200 moving average acted as a fantastic dynamic support in this case. Then we had expansion move to the upside, created a new higher high. So we just repeat the same thing, fib from the low to the high. And we also had minor structure within this level as well. Previous, again, minor resistance, a minor support over here, and a pretty nice rejection off our 50% retracement level. So that's that. Very straightforward. The initial position is completely risk-free, so just reallocated half of the risk into the scale in position, and we do still have Aussie New Zealand reading very bullish on the edge finder. So overall, it's a very, very nice position. I mean, I can't argue with it whatsoever. Dollar Swiss is looking bleak, unfortunately. We had a really, really nice move to the upside, didn't manage to create any new higher highs, and now we are obviously seeing a move to the downside as the dollar is seeing a little bit of pressure. Pound New Zealand, I decided to reposition here slightly. So I took a long position. It was somewhere around here. It was near the high. As we saw, obviously, this quite aggressive move to the downside, let me step away from this initial position. If we see a slowdown around this 200, I can re-enter, no problem. So that's what I've done. Re-entered into a very small long position. I'm looking to basically just DCA this market. And the reason is because we've got the GBP NZD reading very bullish on the edge finder. So keeping it very, very simple. I've got nothing complicated here. We are looking to go short on the New Zealand yen. We're not in this position yet, but we are looking to execute a short position around this area. And we're also short on the DAX. This is more of an intraday position. Just looking for mainly a correction of this gap, or a fill of this gap, I should say, and a little bit further downside, see a bit more of a correction of this wick that we saw on the market close. So yeah, that's it in terms of my open positions. Again, very, very basic. We don't have too much going on, nothing complicated in terms of fundamentals or macro, and I've got nothing on my watch list. I'm looking to do a bit more research over the weekend and come back on Monday with a fresher outlook. Average true range. Okay, sweet. So Euro Aussie is the only bearish reading right now. There is nothing else that is getting this. Hold on, sorry, I just realized I need to close out a video playing on the side. That was really distracting. So yeah, Aussie, not Aussie, New Zealand, Euro Aussie is the only bearish market right now. So let's take a quick look, because I did want to go short a couple of days ago. I didn't do it, but I was looking at this 200 daily, sorry, not 200, the 50 daily moving average here. And the idea I was looking for was sort of a mean reversion of this move. We were talking about this for quite a while. About 1 or 2 weeks ago, we were saying, this is a very, very extended move on pretty much all time frames. So monthly, weekly, daily, the RSIs were oversold. We're outside the Bollinger Bands. So it technically just looked a bit too extended. I wanted to see it come further. I really wanted to see it come towards this 200 moving average on the daily. We didn't get that. Excuse me. On the other side, as I said, I was looking to take it. The reason is because we had a 50% retracement here. We saw a really nice rejection to the upside, rejecting our 50 moving average as well. But there's just not enough there. I'm just not comfortable. I don't think the euro is necessarily strong enough or weak enough to really warrant me being involved. So yeah, I'm kind of just sat on the sidelines. But as I said, the Edgefinder is supportive. So if we could maybe see some sort of double top here, maybe there's an idea of going short, but yeah, I'm happy to not be involved for now. On the other hand, we are seeing indices getting a bullish reading. So we're seeing the Russell, UK 100, the Nikkei, and actually that's it. But we are seeing some of the index equity markets getting a bullish reading, which is quite nice. So, and the reason I'm saying that's nice is because obviously we've seen quite aggressive downside since the Iran situation. So what do we want to look at? Let's take a look at the Russell. If I can find it, there we go. So yeah, the Russell seeing a nice upside actually, and what we have seen is a double bottom, rejection of our 200 daily moving average, higher low relative to this previous low. So technically and fundamentally, it's quite a nice bullish market. But if I wanted to actually be involved, I think I would need to see this market start printing higher highs. I'd need to see something on a technical aspect to really tell me that this trend is bullish. Yes, we have these moving averages. Yes, we have these higher lows, but we've not really done anything. You know what I mean? We're still sort of just stuck in this sideways price action. We're not seeing a really nice lift off to the upside yet. So I would have really liked to see this break above these previous highs over here, retest this level, and then a continuation to the upside. That would be awesome sauce if we could get something along those lines. Sluggy, good to see you, my friend. Hope you're well. Paul, James, what about GJ? Let's see. Well, it's seen some nice upside. I am not really convinced on an MOF intervention, so we're not even going to discuss the intervention aspect today. We've spoken about it so many times over the past couple of weeks. My answer is always the same. I just don't think it's coming anytime soon, or at least in the near future, within the next 1 to 2 weeks. So to be a buyer, actually, let's see the edge finder. We do have a bullish reading, so that's fantastic. So we've got bullish trend, bullish edge finder. But yeah, it's kind of similar to what I just said on the Russell. I think I would need to see this break, retest, and continue higher. I wouldn't feel comfortable buying into this level. I've just remembered something else that's very, very important for this is we are heading into the weekend, and we should all be fully aware of Trump's habits. So what we don't want to do is start selling yen and buying something like the pound. We get some sort of escalation, and actually we see the yen start catching a bid on the back of that on Monday or market open. So that's something to just think about. Although if that does happen, we might see oil rise, and then obviously we see that inflation aspect. We see the pound actually gaining strength. So be very careful is what I'm trying to say. But yeah, just keeping it simple, straightforward. Break, retest, continuation to the upside. I would be looking to enter on the rejection of this level to confirm buyers have stepped back in. Weak DXY, Thai massage is expensive. I wouldn't know. Only one bearish. Yes, I know. Putting into this war, MOF might use liquidity to intervene. No, Sluggy, I think it would actually be the opposite. More liquidity in the market would, I think, put them off intervening. As I've said many times before, their historical operation when it comes to interventions is normally they will do it in a low liquidity period. I think right out of a war would actually be higher liquidity than they would like. I think really what you'd want to see is some sort of US holiday, whether it be, bank holiday, Thanksgiving, Christmas types of, you get what I'm saying. Basically just when traders are away from the desk. It could even be during the summer, obviously when we get the summer holidays and whatever in the UK. I'm not sure what it is in America, but yeah, there you go. So let's take a quick look at oil. Nothing overly interesting right now with oil. We are just sort of seeing the sideways movement. Obviously, on the ceasefire, we did see this take a bit of a hit. Since then, really nothing's gone on. I would put this down mainly to a little bit more of the uncertainty in the markets, because obviously we had violations. We're still getting headlines coming in. However, I don't think there's enough of a catalyst. I mean, clearly, there's not enough of a catalyst to drive oil any higher at the moment, but also there isn't enough of a de-escalation to drive oil back down to its pre-war price. So personally, I'd be staying away from oil for now. If you are, I'm going to say optimistic. That's probably not the humanitarian way of saying it. When I say optimistic, I mean optimistic about oil prices. There may be a long idea here, mainly just following the trend, and that's about it. But other than that, there's nothing. James, I'm short GBP AUD. No, I'm not long anymore. I've stopped out of my long position. So I don't think there's really anything here, is there? No reading, bullish or bearish. For me, there is nothing there. I think if you wanted to trade the Aussie, if that was your prerogative or your idea is benefiting from the Aussie strength, Euro Aussie is probably the best way to go, or Aussie New Zealand. So the way I would look at this is, what's the point of trading or trying to trade pound Aussie when it's not on the edge finder versus just trading the Euro Aussie that is on the edge finder? You know, do you get what I'm saying? Keep it simple. Very beautiful drive. Very beautiful. Yeah, drive DXY down, and I can buy it after the war. Maybe. I would be very careful though. So what we could see, and what I think we will see after the war, is actually currencies that may be decreasing in value. And the reason is because the war obviously drove oil prices higher, driving yields higher and inflation expectations higher. If we get a complete de-escalation, we get oil flowing as it normally would or normally does, we will start seeing those inflation expectations decrease. We might see yields dropping on the back of that, thus currencies weaker on the back of it as well. So in terms of buying the dollar after the war, to be honest, I'm not really sure I'm a huge fan of that idea, because the dollar has also been supported by war premium, which obviously will have been or will be taken out of the price at that point. So just admit, my man, but I'll give you something. There's a gap at 99.5 to be filled. DXY going to choke. I'll be honest, Paul, I've got no interest in the dollar. I've got no bias. I really don't care. I mean, I don't mean that as an insult to what you said. I'm just saying I don't care if it goes up or down, whether it goes down to 90, up to 100. Not my problem. I'm not really involved with the dollar, other than dollar Swiss, which is obviously about to hit stop loss, it seems. So I've got no investments regarding the US dollar right now. So I'm playing pretty much full defense, really. I've got a few positions that are open. The positions that are open are pretty low risk. But yeah, it is what it is. Gold. I could see gold coming back to around this level over here. So that would be, you know what, let's round it. Let's just say 5,000, just for the ease of round numbers. I think that's simple. And the reason is just because we've got previous support over here. We've still got this sort of impulsive candle. I'm more doing micro analysis here, so take it with a grain of salt. But if I had to sort of say an idea, I think this is what would happen. So some sort of correction up to around 5,000. From that point, it would heavily depend on what the developments are. So obviously, if we get escalations, the gold will continue to fall or at least stay pressured. If we get de-escalations, then we might start seeing these bank targets coming into play. So Credit Agricole is expecting 5,100 by the end of the year. We're almost there. So, you know, Goldman Sachs, Goldman Sachs's end of year forecast is at 5,400, but Credit Agricole, this isn't their true end of year forecast. This was in their 12-month forecast from, I think it was the end of March. Yeah, I think it was the end of March. So it'll be March next year. They're expecting gold to be at 5,100, which I'm not sure I would take very seriously, to be perfectly honest. Not necessarily charts and gaps ball out. No, I do pay attention to them, but I don't trade off them. It's not like there's a gap I'll trade into the gap or from the gap or anything. But yeah, have a good one. No, I trade macroeconomics. Chart is just for entries. Alphamane, yeah, fantastic. I think that's pretty much how it should be. So let's just see. I mean, I was going to check COT. I just realized it's Friday. There's no point checking COT now. Actually, unless let's just see. Actually, when was the last filing? Yeah, April 3rd. So yeah, we don't have the newest one. So Aussie New Zealand, we spoke about pound New Zealand. We've already looked at. I'm long pound New Zealand. Pound Swiss. This is an interesting one because I do quite like the idea of being a buyer. I think it makes sense. The problem I've got is just it's such an ugly bearish market on higher time frames. It's like, you know, you could go down to the H1 or the H4. This looks great for, I mean, actually, it looks horrible, but, you know, the trend is bullish. Longs by default make more sense here. H4, similar thing. We flip from bearish to bullish, but then you go onto the daily, the monthly, the weekly. Look at how, you know, I just can't justify being a buyer in that. The upside, I suppose, would be the swaps. You get paid quite nicely for being a buyer, but it is very costly to be a seller in pound Swiss. So yeah, I just don't think there's anything here for me, unfortunately. And it's not because of the fundamentals, really. It's more just because it's just the market. It's just not my cup of tea, really. I was short. I think it was the start of this year. I was short pound Swiss, and I ended up down about 0.5% just from holding the position. It was just range bound. It was still pretty much at my entries, but it just cost way too much to hold. Nikkei, yes. So we were long on the Nikkei, but we closed it for about 0.5%. I would like to get back into it though at some point. So on the H4, we flipped out of bearish. So we were in bearish trend here. We flipped. We're now bullish. So technically speaking, we want to be buyer, or I want to be a buyer. Fundamentally, the edge finder is also saying it's bullish. So in terms of getting an entry, it could be a little bit difficult because we're not seeing, you know, let's call it typical price action. So what I would want to do is obviously just draw the fib from where the low to wherever the high is going to be printed. Having said that, I actually think I'd want to go daily and do it on a daily level. So something like this, I think, is completely fine. So we take the daily low to wherever the next high is printed. Let's just hypothetically say it's here. This would give us a really nice level to buy into because this would be, you know, we've got minor resistance through here. So if we could get the retest into the fib, into previous structure, and a rejection, I think that could be quite nice. Very simple, straightforward stuff. But yeah, again, it's just a case of what happens here. Do we get that? Do we not? Yeah, but that's kind of it. So we've looked at almost everything that's on the edge finder now. We speed ran through that. Follow FVG till you get a margin call. Yeah, great stuff. As of now, markets are giving a middle finger to all the sellers. Yeah. It's just very difficult. We spoke about, I think it wasn't, I wasn't on yesterday. I think it was the day before yesterday we spoke about it. But it really comes down to what do you think is going to happen? Because we should all be aware that geopolitical events typically, depending on obviously the severity of it, but things like what we've had, COVID, war, those types of things generally will override, or almost always override the fundamental drivers. So it doesn't really come down to what do you think the central bank's going to do? What is growth? It's more about how does that event affect those things? And you're mainly trading around that event. So it comes down to really, do you think we're going to see escalations? If so, you'd obviously want to be buying oil. You'd want to buy the Canadian dollar potentially, the US dollar. If you don't, if you think we're going to get de-escalations, you might want to go risk on, start buying the S&P, euro, other things. So maybe actually, sorry, maybe not the euro because the euro has been bolstered by obviously the inflation expectations. But hopefully you get what I'm trying to say. So it's tricky to be a trader right now because, again, it mainly comes down to just what do you think is going to happen. And I don't like to really put money on the line with that situation, especially when it comes to Trump, because I have no idea. So all fun and games. Can you take a look at New Zealand US dollar? For sure, we can take a look at that. Luckily, I'm not in this position. Yeah, so we're not getting a read. Let's just take a quick look at the scorecard because we were very bearish on New Zealand US dollar, which has actually flipped. So technicals are bullish. Growth is still actually very bearish. Jobs is bearish. Inflation is bullish. It's tricky. So I'm just trying to think before I speak. Normally that's the best way to do it. I don't think I'd want to be involved. If there was some other reason to be involved in this market, which again, personally, I don't want to be, but I think being short on a technical basis makes sense here because we've got previous support and previous resistance. We're now coming back into this level. We've still got a bearish daily trend. Technically, the H4 is still bearish, although we have broken above our 200. If we could see a convincing rejection from this level, so whether it be a daily bearish candle close, an H4 engulfing, whatever it is you look for, maybe something like this could be valid, and then look for a correction of this impulse move. But again, I'm not doing that. Not my personal favorite thing right now. Let me just catch up on the chat. Interesting how James doesn't see the play in the dollar and pound and euro like you and me, and Marco and Alan are seeing it, right? I honestly saw it happening, which is why I decided to stay out until after the war. What are you talking about, Arthur? We are usually seeing the same play as him, not this time though. Well, this is the great thing about trading. And this is actually why a lot of, in fact, I think almost every institutional desk, maybe I might not have this right, so don't take this literally, but from what I've heard and who I've spoken to, when you go to let's say you've just graduated university or college or whatever, you've gone to JP Morgan or Goldman Sachs or one of the big banks as a trader, that's your job, you are a trader. They don't give you a set do this type thing. It's not like where you might go to a normal job, they'll give you a manual and they'll say do this and do that and this is how you do it. They don't do that. And the reason is very very interesting, I think, and it's because what they don't want to do is have a floor full of traders that all have the same ideas, because what you end up doing then is everyone ends up in the same positions, oversizing, obviously because you've got so many people doing the same thing and you got no diversification within the whole portfolio. So that's another thing is, you know, when I'm just trying to think about how to word this. When someone has a different view on a market or doesn't think the same thing, it actually can often be a very good thing for you, because you can obviously then take their thing and your thing. You can weigh it. What's the pros? What's the cons? What makes sense? What doesn't make sense? What works with what I'm looking at? What's the strategy behind it? And then you can obviously take your opinion, that whatever works best. What of AUDCHF? Let's see. What does the Edge Finder have? It is bullish. Trend is bullish as well. So let's actually just see what is the state of Australia. So Australia is not getting a fantastic reading. It's only getting a 33% on the heat map. What about 42? Yeah, I'm not a huge fan, to be honest. But having said that, the market isn't wrong. I mean, the trend is very obviously to the upside. Edge Finder is giving it a bullish reading, so I'm not going to sit here and argue with it. I'm not a huge fan, to be honest, but I think if we were looking to be if we were looking to be involved, I would be looking for something along these lines here. So this would, if we got to pull back into our fib zone, that would meet our 200 moving average. It would slightly retest some previous structure. Again, it's sort of minor structure within this zone. There's nothing overly interesting here. But I think this might be enough on a technical side to warrant taking an entry. And then obviously, as I said, you've got the edge finder to back up the fundamental side. So I think that's fine. But I'm just trying to think, is there anything else? I don't think there is. I don't have a whole lot of research or a whole lot of information on the Swiss, really. It's not something I've been paying that much attention to. Bet Ellen doesn't like being a dollar bull right now, but that's what stops her for. Yeah, well, that's the other thing. I mean, I can't, with the dollar, it comes down to, again, as I've already said, what do you think is going to happen? Because if we get that de-escalation, we're going to get the war premium priced out, and we're going to get yields coming down very likely. So that's obviously going to drive the dollar lower. If we get escalations, then we're going to see the complete opposite, which is going to drive the dollar higher. So I just don't see a reason to be really on either side, just for my personal, at least my portfolio anyway. So I've got about 4 minutes left. Let me just check very quickly the schedule because I keep forgetting to do that. So after me, Alan is coming on. So if anyone has any final chart requests, let me know. In the meantime, we'll take a quick look at the FTSE, which is here. Very nice rejection off this daily 200. That's really nice. I'm a bit salty I've missed that, actually. That would have been a fantastic position. So let's scale down. So daily, yeah, this is actually looking really nice. I might have to put this on the watch list. So daily rejection off the 200, edge finder bullish. H4 flipped out of a bearish trend into a bullish trend on the moving averages. We do have a slight gap here. So what I wouldn't mind looking for is some sort of correction into this gap, retesting, not a retest, a pullback into the fib, meet the 50 moving average. If we see a rejection, a long position might be quite nice here. So I think actually, yeah, I'm going to keep this on the watch list for next week because I think there's some potential there. Yen pairs. Yeah, I'm not really interested in the yen, to be perfectly honest with you. I think we're generally going to continue to see them drift to the upside overall, especially long term. Short term, not overly interested. I think that specifically dollar yen can very easily get back to its previous all-time high at 161. From there, I would expect dollar yen to start heading towards 162, 163. And then once we start heading towards 164, within that range, I would expect some sort of intervention. Whether that will happen, I do not know. I could be completely wrong. But that's just my thoughts, my opinion. But that applies pretty much across the board. I think we could see a lot of yen pairs just continue to drift to the upside. The yen is a funding currency. It's really a case of just buy dips, paid swaps, and let the market do the rest of the work. Bitcoin, we can do a final check on Bitcoin and then I will hand over to Alan. So I was looking at Bitcoin this morning and what I am seeing is a little bit interesting. So we were looking at this, like 1, 2, 3 weeks ago, give or take. So we were looking at this 200 weekly moving average and this previous level of structure. I was actually quite bearish at this point. I thought we were going to continue lower. Doesn't seem to be the case. We're seeing actually buyers stepping in off this 200 weekly moving average and off this previous level of structure. So I think it's a little bit early to be getting overly bullish. I'm also not, let me just double check. Yeah, Bitcoin's not on the edge finder either. If we could see Bitcoin get a bullish reading on the edge finder and we can break out of this weekly range that we're in on Bitcoin, I think being a buyer could actually be very, very profitable and take it back up to around 120, 130, maybe 150 if you're a Bitcoin bull. I don't know enough about it to start trading it into new all-time highs or calling new all-time highs, but I do think there is potential to be a buyer here. However, on the other hand, if we end up breaking lower and we reclaim prices below our 200 weekly moving average and we can clear out these weekly lows, I would be looking for a retest and then a continuation lower. I think that's kind of the base case for bullish and bearish. But again, as I said, Bitcoin is just not my asset. It's not something I'm overly knowledgeable in. So I don't want to sit here and start spouting off loads of things that might not be right. Okay, right. My time is up, ladies and gentlemen. So I'm going to head off. I hope you all have a fantastic weekend. Enjoy the rest of your Fridays. Stay safe. Don't get margin called. And I'll speak to you all next week. See you later. And Alan is coming to take over, so don't go anywhere.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Happy Friday. The week has been going by really, really fast here, but let's go ahead and talk about markets here. We did see some disappointing data for the U.S. here this morning, which is getting some softness there in the dollar. What did we have? We had CPI that I believe came out neutral. And then obviously we had GDP yesterday, which is not good there. Is it showing up here on my screen here? Okay, cool. Yeah. CPI came in still higher than previously, but lower than expected there across the board there. So, and then you had GDP yesterday that came in soft. So you're starting to see a little bit of misses there when it comes to the dollar index. And you can see here on the top status page that is no longer as attractive as it once was. So I'm actually looking to go ahead and we'll see what happens, right? There's a couple of things that I have on my mind when it comes to the dollar index. For one, if you were to get a de-escalation, this thing just continues to fall further. We do have that 200-day moving average that we tested once before. We bounced up on it, but we're testing it again, it seems like here. And I think a good solid level of support beyond that 200-day moving average will be somewhere right here within the net $98 handle. That would be where ultimately another level of support lies. However, if you do get a re-escalation in the Middle East, then perhaps dollar continues to go ahead and catch that safe haven bid. And then we just test that 99.5 handle there. Maybe we fill the gap and then ultimately trade lower. There's a couple ways. There's a couple paths there for the dollar. To be honest with you, I'm a little bit uncertain. However, I do have a definite outlook that I'm looking to trade depending on certain scenarios. So if you were to get a continued de-escalation, you have the repricing of the dollar getting priced out of there, and then you also do have that the dollar's data is not looking too hot anymore, right? So in that case, I would be looking to go ahead and buy euro dollar. That's my preferred one during all of this. I would look for some kind of a pullback here, maybe into that 200-day moving average here where the 50 lines up, also right above that level of support, 1.16500 level. And then as far as a take profit goes, let me draw this out here because that is something I need to do. I like this level right here, this little cluster, previous resistance, then support, then resistance here. So that's around 1.1800. That's a good level here. We are pretty much at the halfway point already to that zone. So again, I would need a pullback into here for me to participate on this trade. I don't want to chase price, because if I chase price here and we get the pullback, then I'm going to be upset. Or if I chase price here and we get a re-escalation and this thing, falls to the floor, I'll definitely be upset. So I'm going to wait for the pullback. That's the smarter thing to do. But I do like this general area right here. And if I measure it out from a Fibonacci level, let me just do this. Yeah, so it lines up right there with the this whole zone is pretty much 38.2, the 50, and then the 61.8 is the more conservative approach. But I like anywhere within this level here, essentially 1.16200 or 1.165. So I like that area. That's going to be my preferred one to the upside. Again, gonna need a pullback into that one. And then as far as my other positioning goes, I am in a little bit of drawdown here with Kiwi dollar. So if I were to get that retracement that I'm looking for in the euro, most likely than not, I get that retracement here in the Kiwi dollar, and I can just get out of that trade scot-free. Same thing with dollar CAD as well. Though I do like dollar CAD to the upside here longer term. So if I do get stopped out of this position, which it seems like I am going to be, I actually do like this 1.3700 level. I think that can be very solid support. This big breakout here, if we get a retracement all the way here, I think that's very, very solid. I do like it to the upside. But again, that is all subjective to the fundamentals in the US. If they continue to soften, then this trade will not work. But yeah, that's pretty much my thought process as far as new trades go. It's really tricky though, just because you do have the possibility of de-escalation or re-escalation. The market is really, really hoping for a de-escalation. However, you're getting some conflicting headlines, some conflicting talks. Like, you know, some individuals or one side is violating the ceasefire agreement before it even started, and then the whole tollway thing that the president does not like. So there's lots of things to navigate there. Ideally, I would be flat in this market. However, you know, I'm not. So I'm looking to get out of it here when it comes to Kiwi and dollar CAD, and then, you know, be prepared for any pullbacks in euro dollar, and then just see what happens there. Do you have an alarm into the cubes? Am I seeing it right? No, I just have I guess the way I have it structured here, and I did this a long time ago, but like the style of it has a line in the middle of it. You can see here, you just double click it. There's a middle line. It's blue. I don't know. I just it's visually appealing to me, I guess. These are basically the settings that I have for it. So that's that. There's no text, and the visibility. Yeah, this is it. The only thing that matters here is the this right here, the style aspect of it. Well, these are just the zones that I have, like support and resistance. The reason why I don't really put them in green or red is because they can flip either way anytime, and I don't want to confuse myself. So with currencies, they usually trade within zones here. So like this one, you can see here was resistance and then support, and then we were kind of just flirting around. Like even when we got out of this zone here, this range, we were still respecting this one right here as support, right? So I like zones. It makes it super clean in Forex. I was telling H Ball out in like a DM the other day, like why I like Forex is because it pretty much trades zone to zone, and the technicals in Forex are for the most part very clean. Targeting 1.18 on Euro, Allen, or did you pull a 180 on your bias? So I'm definitely pulling a 180. I mean, the fundamentals in the dollar are not looking as strong as they once were when I first initiated my Kiwi dollar short and my dollar CAD long. So I'm definitely flipping my bias there. I'm more open to the idea of a de-escalation. So yeah, I'm looking for this area of a target here for take profit if I do get long the euro dollar. I don't want to chase price right now just because we have extended already. And we actually haven't seen a meaningful pullback here in this recent leg up here. So I do think that a pullback can come. So I'm going to be patient on that one. And if I do get one, again, anywhere within this level here, 1.165, I'll look to go ahead and buy it and then, you know, go ahead and trade that to the upside. But I definitely did go ahead and pull a 180. And I don't think that's a bad thing. I think you definitely need to be reactive when you're trading, and you know, that's the whole way of the game. If I was a perma dollar bull or perma dollar bear, right, you can definitely get crushed in times of this. Like if you're a perma dollar bear and you're trading this environment and you don't, and you know, hold that idea firm, you would have got crushed from January 2026 all the way up until like 2 weeks ago. So yeah, I'm definitely flipping my bias there. And I'm when it comes to the currency that I'm looking to trade dollar to the downside, I like euro dollar the most. I put a limit on Bitcoin and I missed the pullback by so little. Rough red week, not gonna lie. It's actually been a soft week. I mean, these are floating for me. Like this PNL, Kiwi dollar, and dollar CAD is floating. But besides that, it's actually been a very soft week. I'm down 0.5% on the account. Also, too, Swiss yen is actually not looking good as well. I might get stopped out on that one. So that would actually realize some more negative P&L there. But that's a little bit tricky there with the yen basket there. It seems like we are still trading near the lows. Perhaps we were a little bit too early there when it comes to that yen intervention. But that was one of the things that I mentioned, is that, you know, this is very speculative. You don't know the timing of it, so that's there. And I think there was some chit chatter from the Bank of Japan, but then there was no follow through with that one. So that one, I'm just going to consider it. I'm gonna just let it do its thing. I really don't care about the position as much, so we'll let it play out there. I'm more focused on the dollar and the stock market and oil and yields. I think that's like the big trade. That's the current theme that's dominating the market right now. So I'm definitely paying attention to that one. Speaking of oil, we did go ahead and test this like bullish trend line here that I marked up here. Again, technicals are subjective. This is just something for me to visualize, the price of oil and what it's doing here. We did go ahead and test that one. We are still elevated though. So although we did see a drop from the highs or from these secondary highs here at 117 all the way over here, minus 23%, we are still very much elevated. In fact, we dropped that 20 something percent, but we're still up 48% from that initial breakout level. So yes, we did have a pullback in oil, but we are still very much elevated 48% from that breakout. So not good. In fact, if you were to see, oil stay elevated for an extended period of time, in fact, let's measure this out here from the breakout till now, it's been about 42 days. I think I saw from certain analysts, whether from the big banks there, if you were to see something like 2 months and beyond of elevated oil price, then not good at all. That can really have some trickle effects into other economies. So for that, I'm going to be watching yields. This right here, this chart will tell you everything that you need to know when it comes to central banks and how they may react and position. So we'll see. So we are getting some dollar softness right now, right? Because you do have the idea of a de-escalation. However, if that stalls through and oil stays elevated, then maybe you do get some dollar bullishness again, right? Maybe you see yields stay higher with the prospect of higher oil, higher inflation. Central banks have to start tightening up. Maybe the Fed has to go ahead and say, like, look, man, we're looking to be restrictive here from here on out, because, the idea that most central banks are taking into account is this is going to be a short-lived conflict, right? A little bit more than a month, right? The ceasefire is coming through. However, if things start to fall and it doesn't come to fruition, then, the real risk that everyone was fearful of, the reason why the dollar was up so much, the reason why yields were up so much, that becomes more of a reality. And so maybe central banks actually start to pivot in that direction. So we'll see. Again, lots of things to consider though. But it is interesting to me that, we are seeing the dollar data become softer. Obviously, now you're starting to see those dollar readings to the strong side no longer there. So that's all thanks to the Edge Finder for catching that for me and avoiding that unnecessary loss. And to your point, I can do a whole 180 pivot. However, I can do it effectively and smart and know what I'm looking to get into next. So go ahead and get yourself a copy of the Edge Finder, guys. It is 40% off right now. So definitely go ahead and indulge in that. And then also too, we do have the Discord as well, which is completely free value. You have bonus content, chart markups, polls, all that good stuff. And then there's also a free Discord chat now that you can participate in. So that's awesome as well. So before it was only to the paid members of the VIP, but now the free chat, there is a free chat that you guys can interact with each other and all that good stuff. So definitely go ahead and participate in any way you can. I promise that you would love the trading community and it will be worth your while. Let's see. So this is a short-term de-escalation play for you. What about the macro play after the war? Off-vein. So, the current position that I had with Kiwi dollar short and dollar CAD long, that was based off of a number of things. For one, the fundamentals in the US were strong, right? So I like the pullback into this level here for Kiwi dollar up into this level of resistance here, the 200-day moving average and the 50-day right above it. So you had strong fundamentals in the US, which that is no longer the case as of yesterday. We had that bad GDP and inflation here today coming in cooler than expectations. But we had strong fundamentals, and then the Kiwi dollar as well had weak fundamentals. So that was lining up with that trade. And then I was also playing the idea that the war actually wouldn't be that much of an easy pullout. I was thinking more of like the ceasefire would be short-lived. We were seeing comments about the agreements being voided, and also too the points that both wanted to have like done was contradicting. Like Iran wanted uranium ability to get that, whereas the US didn't want that. And then Iran wants to charge tolls, but then the US didn't want the tolls. So there was some conflicting points there, and so that's why I took the trade here, Kiwi dollar short. But now that you're seeing the fundamentals in the dollar start to soften a little bit, that gives me the thought process of, okay, well, if the dollar's not going to be so strong, maybe it's a little bit more wise to go ahead and be more neutral or be more open to go ahead and go short the dollar. And then just looking from a technical perspective as well, you're starting to see that the dollar's definitely softening from a technical level here. So you can see that strong uptrend here, and we are now starting to retrace that a little bit there. So that's kind of my thought process. I hope that helps a little bit too. Blank offer posted this string. Oh, I don't think that's a chat. Okay, cool. Let's see the chat here. Rough red week, 1% for me. Where's Nick? Nick was on this morning. Cool. We have Marco here joining me as well. Marco, what's going on?
Hello. Doing pretty well. How are you?
Pretty good, man. Pretty good. We had some softer CPI than expectations here this morning. So we're seeing some softness there in the dollar. My thought process is that if you were to see that softness in CPI and a true de-escalation or progress in that direction, then that definitely helps the dollar bears. And I can definitely see dollar index testing like 98.
I mean, so inflation came in a bit cooler than expected, right?
Cooler than expected, still elevated. Still way above that 2% target. So it's definitely higher than the previous, which was 2.4. So, but the expectation aspect of it did come in softer there. It's still tricky for me because if you were to get for one, oil is still way up there. So we did have a big drop from this like secondary high here. It was 20% drop at its peak, 22%. However, if you still measure the move from the breakout level, the initial breakout where oil was, that's still up 48%. So yes, we did come down in oil, but it's still very much elevated. And if you were to see this for a prolonged period of time, then I do think that the risk that most central banks were fearful of, which is higher inflation, maybe that starts to get priced in there again. And in that case, like you will see dollar bullishness. But I think the market is really grasping to the idea that the ceasefire will actually come through.
Yeah. And do you think some of the inflation is starting to come through into the CPI, some of the inflation from the rising oil prices? So I mean, especially
I think the effect would be lagging. Like, I don't know if it's that immediate, to be honest with you. However, like let's say it is lagging and this is just natural inflation drifting higher, right? Then imagine what it would look like with this elevated price. You know what I'm saying? Like it'll be significantly worse. So that's like my thought process. And that's where I think like that could be the worst case scenario where like this is just, inflation's trickling higher naturally without the war or without affecting the full on scale. And then if you were to see this price elevated for too long, then you really start to hurt. And then from there, central banks really have to start tightening up.
Yeah, I mean, I can see a definite spike here on the Edge Finder. So as you mentioned, previous number 2.4, current number 3.3. So, it seems to be starting to trickle higher and by a lot. It's way above that 2% target, which could definitely be a problem. What's your thinking about the weekend? Are you looking to go flat into the weekend? Because I'm considering maybe closing my oil position later today. But what's your take on that?
No, I'm not gonna go flat. I'm gonna let it do what it needs to do. It seems like I'm gonna be taken out here anyway. So we'll see what happens. Like Sunday open, like dollar CAD is definitely gonna hit stop loss. It seems like we're very close to that. Kiwi dollar, we're still like within the 50% of my stop loss level here. But no, I'm gonna keep it open. These were like relatively small positions as well, so it doesn't really matter to me as much.
Yeah, I'm just thinking about my oil position because I think the negotiations are supposed to start on the 11th, which would be tomorrow. So if we get some breaking news, I could get gapped out of my oil position. I'm gonna leave Swiss yen in. Swiss yen, I don't mind. I mean, it's gonna hit the stop loss anyways, most likely. So I don't mind holding this one through, but maybe closing US oil before the weekend might be sort of a smart choice. As far as the movements go for today, we don't really have much. I mean, gold moving up just a little bit, stocks moving a little bit as well. They're not retracing though. So looks like what I had in mind isn't really what the markets are thinking. What I had in mind is the ceasefire is fake, essentially. The agreements are completely opposite. So what Iran wants, what the US wants is completely different. And the main subject, which is enriching uranium, Iran still wants to continue to pursue that. So, what will happen. But you have to think about Trump. Trump is he's pretty easy to chicken out. I mean, he's pretty fast to chicken out. We saw it in April when he put a 90-day tariff pause. Markets loved it, and they never looked back. And I think we saw it in 2018, if I'm not mistaken. There was another trade war where Trump was pretty sort of quick to chicken out. The pattern that you can see with Trump is escalate, like go crazy on Twitter and go crazy with announcements. And then after the situation gets very, very bad, you just taco out of it and you pray that the markets quickly recover. So that's another factor as well. I think the US could actually, I mean, will they accept a total, not a defeat, but let's say, would they accept Iran? Maybe they would definitely accept Iran putting a toll on the strait.
I think so too.
Maybe they can even accept Iran developing or enriching uranium. I don't know. Anyone's guess.
If I'm correct here, if I remember correctly, there was a clause in the points there that there's a regulatory body that they're willing to have have oversight over that, the uranium thing, and full audit capabilities.
Okay.
So yeah, maybe. I mean, the markets are taking this as very, very good news, right? And I think they were grasping for the idea for that. Like they want any hint of that. My only fear is that they can very much be very much disappointed. Especially over the weekend. I don't know what happens. I hope there's a de-escalation, in my personal opinion, or my personal view. That's kind of what I'm looking for. However, I don't know, man. I don't know if this is extreme optimism here, like too early of optimism, because the headlines haven't been confirming that, like, sunny day that we're all thinking of. Like they're definitely back and forth. So that's kind of my only thing that throws it up in the air, and that makes for me, like, picking a side too hard at the moment.
Yeah, absolutely. Like if you have been spending time on Financial Juice this week, you would have noticed that it's all over the place. So no one knows what's happening. Is the agreement real? What is Iran thinking? What is the US thinking? It's all very mixed up. What is Israel doing? Because Israel seems to be unhinged and just doing whatever they want. And with so many factors going into it, staying flat, as I mentioned yesterday, is not a bad way to go. Or just having very low exposure, very small exposure to the markets is not a bad way to go. But stocks seem to be loving it. I mean, stocks pretty close to all-time highs, actually. So that's good to see. And of course, hoping that there's an actual ceasefire so that we can go back to just monitoring what the Fed does, CPI, NFP. That was much, I would say, much more simple and better for the world at the end of the day. Anything that popped up recently on your radar? Anything that you're looking to get into, or are you just staying flat at the moment?
Well, if you do get some kind of a de-escalation, I would assume that there's still some repricing out of the dollar that needs to happen. And then you include the idea that the fundamentals of the dollar have actually started to come a little bit lackluster. I would like to participate by going long the euro dollar. The only thing is, the dilemma is that I'm waiting for a pullback into this level here, 1.165. And the target range for take profits will be somewhat close in proximity. I would say 1.1800, which is about 150 pips. again, I would need a pullback. This thing has been running up here, so I think that there's a pullback to be made. However, I've been proven many times that the pullback just never comes, and I missed the train all entirely. But this zone here, I like. This was previous level of support here, once, twice, then became resistance for a good little bit here. So if we were to retest into this zone, this lines up with the 38.2 and the 50% retracement level here, just considering that, this price where we're at right now. So a pullback into this level will be one worthwhile. But again, if you get the pullback, then you have to come to the conclusion with yourself, like, which side do you want to take? Do you think there's going to be a de-escalation or a re-escalation? So there's that aspect too, that you have to make that decision when the time does come to execute. And again, it's just really hard to make that call right now.
I agree, absolutely. And I agree with you. I've also had the experience, especially in 2025, where the move was happening. I was just hunting for pullbacks. Best example would be, I think it was Pound Aussie. Wonder what Pound Aussie is doing nowadays. Yeah, during this sell-off, like, I started looking for a pullback on the 21st of Jan, and I never got it. So
and what makes it worse is that it seemed like the entire A1 community was in that trade, but me. Like, they were just flexing it all day in the chat, and I just that was just not me.
Yeah, that was also pretty tough, coming to the A1 Discord every day and seeing pretty much everyone selling in the Pound Aussie and making profits, and I'm out of it. that was pretty tough. Any comments that we can go through?
Not from my understanding here. So guys, if you guys have any chart markups that you guys would like us to go over, definitely go ahead and throw those in the chat. We'll give you our honest thoughts and opinion. No, not financial advice, of course. One thing though, one interesting take that I have, this is a take, if anything. I do think that there is a real vulnerability here. I think a lot of people, especially that are maybe not in the know, or taking this like too naively, or maybe chasing the stock market right here. I think that's very probable. Old me, Alan from back in the day that was just getting into this, would be like, oh my God, I need to buy right now. And so I do think that you do have a little bit of risk there, that there is some over optimism, some crowded trades happening right here. And then with any slight disappointment, you can very much fall all the way down here. The reason why I bring this up entirely is because I would advise or suggest anyone here that is, thinking that this is a risk on move. Although this price action looks very pretty, things don't just move up in a straight line here. Most of the big move has been made, and I would really suggest that we become patient here and wait for a pullback, whether it be that 200-day moving average or that level of support here at 6655. Just because you would, one, get a better risk reward ratio, but two, you avoid any sharp pullbacks, any drawdown, because markets have a natural tendency to correct themselves and do what needs to be done. And so, yeah, I would just wait for that. And if you do get a pullback into this level and it definitely holds, then you can confirm that this is a strong uptrend worth participating in.
Yeah, I would agree with you. I'm looking at my Nikkei, which, let's take a look.
Someone said, not financial advice, proceed to give financial advice. No, you have to disclaim that. You can see here at the top of my screen in the chart. Well, Marco's, yeah, there it is. Oh, James. Fantastic. Look at that. Awesome. Yeah, not financial advice. Just my personal opinion, right? Just my personal take. But go ahead, Marco.
Yeah, I don't have the disclaimer, but I'm in Croatia and you will never find me to sue me. So, yeah.
There you
go. But this is not financial advice. The Nikkei is just running away without me, but I'm looking for pullbacks. So as you mentioned, Nikkei even approaching all-time highs, but I think we could pull back to that 20 EMA. And if we don't, it's fine. Part of the game. Let me just check the top setups. The Nikkei. Bullish, yeah. So Edge Finder in my favor. What is gold doing?
I was looking for that one too. Is it still neutral?
It's still neutral. Oh, and I just want to post the link to the giveaway form. So if you guys want to participate in the DNA funded giveaway, it's going to be a 5K one phase account. There is the form in the comment section right now, which you need to fill out. So just wanted to post that out there. Nikkei is something I want to buy. Gold is something I want to buy. Gold is now above that 20 MA. It's loving the USD weakness that we're getting today on the DXY. Yeah, DXY definitely down on the day. It's not a massive move, but it's definitely going lower. And are you surprised that the market started to respect the sort of the fundamentals again and looking at the inflation print at the CPI?
I think they're truly trying to get behind this whole thing. That's my thought process. I think they're really trying to. I would be too. I'm a market participant. I would really want to get past this as well. So I'm not surprised. I just fear for the idea that they get too optimistic too soon, and they go ahead and if there's an escalation again, then things just start to hit the fan. So that's kind of my concern there. But if you were to get in my opinion, if you were to get another escalation, that the whole CPI, the whole GDP thing gets thrown out the window, and you get that safe haven dollar again. So that's why right now, like I keep saying this, but I'm kind of neutral. Like I can't be picking a side too strongly here, and I'm open to flipping either way. Like someone said in the chat, like I'm going like 180 because I was short the Kiwi dollar. I'm looking to be 180 if you get a de-escalation, and then considering that the fundamentals for the US is not looking as hot as it once was. But again, I have to be very careful. I'm trying to answer the question here for Boss. He said something about the data scanner. I think it's still here somewhere. It definitely got pushed down, but Boss, what I would suggest for you, my friend, is the replacement to it would be this one right here, the Forex scanner, which I think is what you're looking for. The Forex scanner and the asset scorecard. So this one is essentially the data scanner that we once saw, but much more beautiful, in my opinion. It makes it very, very clean to visualize things. So all the assets that you were looking for on that data scanner, I know which one you're talking about as far as which tab, but you can refer to the asset scorecard and the Forex scorecard. So this is the new version, I would say. Put to call ratio would be in their sentiment. Look at crowd sentiment right there, Boss. Crowd sentiment, and it's going to be the first one, put to call ratio. Sorry, Marco.
I wanted to get your thoughts on something else from the watch list. Not the 10-year crypto, Bitcoin. So Bitcoin approaching that upper resistance level. Let me just check if my chart is shared there. So let's do this, add this. Okay, cool. Crypto, Bitcoin going up, which is nice. Approaching the level of resistance. I think the edge finder could be bullish. Let me take a look. Neutral, but I think it was bullish recently. So could we break out higher? Maybe. What I'm noticing, there's no sellers left. I mean, we have been flat from the 5th of Feb, and we just could not sell off anymore. So I don't think there's any big sellers left. Time to go up. Are you watching the crypto markets? And what's your take on that?
I'm not watching the crypto markets, and I don't anticipate that I'll be trading it anytime soon. But what that does is actually I can give you like an idea, an opinion with a clear lens without any bias, right? Just what I see. I really like that the price action here was very boring, I would say, despite all of this, which I think is a good sign. It didn't have a very big reaction like we did see when we had the idea of the deleveraging from the yen, hiking rates. That was a big catalyst. This, however, didn't really affect it much. It's been boring. It's been steady, but I think that's still good if you're a bull. If you're a bear, I would have been like, man, this thing should be dropping. It's a risk asset. Like, why is it not doing that? However, during this whole time here, it's been pretty much flat. So I do think that a bullish catalyst, a bullish catalyst could outweigh anything that the bears would say. And I also did see something here that, correct me if I'm wrong, but Iran wants to collect the tolls via Bitcoin.
Yeah, and Chinese yuan, which is pretty funny because the dollar has been the reserve currency of the world. Anything that you want to buy, you need to buy it in dollars. But of course, China is the new power player, or at least they want to be the new power player. So they would love for the new reserve currency to be the Chinese yuan. And this will be the start of that. If Iran charges a toll in Chinese yuan, but much better if they charge a toll in Bitcoin. That could be a bullish catalyst, absolutely. So shout out to Iran for supporting crypto, but that would be pretty funny. That like the ships start using Binance, and that would definitely push the price higher. So could be a good catalyst. Who knows?
Yeah, but I do think that maybe downside is somewhat limited. Like in my opinion, the war and the risk-off trading and the risk-off environment that we were in should have pushed Bitcoin down a lot further, but it didn't for whatever reason. Yeah. So relative strength is there. It's showing itself here. I was ultimately looking for like 50,000 as a strong level, just from like a technical perspective. 50,000 would have been a strong level, but we didn't quite get there. We dipped out, and we've been actually making some kind of a V-shaped recovery or a slow recovery, if that. So we've been making consistently higher highs, higher lows, just kind of grinding higher here. And we are now testing what could be a level of resistance. So if we pop out of that, I do think that the follow through, again, not financial advice, but it could be somewhat strong. I'm not a crypto trader. I'm not a crypto expert, but that's just my thoughts there.
Yeah, I love that last part with the relative strength, something I forgot to mention. Like Bitcoin has been holding pretty well. Stocks have been dropping. BTC has been holding, which is a good sign. Means that, again, the downside is limited, and maybe the big sellers have left the chat, and now it's either flat or we go up. Do you hold any crypto long term?
No.
Okay, cool. I do hold some Bitcoin long term, and I'm pretty much break even at the moment because my average entry price is, I think, just around 70. So I would love for this thing to go up. But I've noticed, like, if any of you guys are looking for investment ideas, of course, this is not investment advice, but I would say putting your capital into stocks or the S&P is a bit of a safer play than in Bitcoin. I mean, the lottery ticket aspect of Bitcoin is gone. We're not expecting Bitcoin to 2x or 3x in the next 2 to 3 years. It's not going to happen. There's too much. There's too many players that own Bitcoin at the moment. So it's no longer the lottery ticket. If it goes back to 20 or even 10K, then yes, sure, the lottery ticket factor is back. But at the moment, I think the S&P is a better play. So personally, like, I hold more S&P than I hold Bitcoin as a long-term investment. But having exposure to both is, I would say, also a smart thing. Just the ratios, in my opinion, should be more into stocks rather than crypto.
Yeah, definitely Bitcoin would be, if I were to ever implement it, would be a small allocation to the overall. It's to me, it's still like not proven itself. I would prefer a more established asset like the stock market, the indexes, ETFs in certain sectors, gold as well. But yeah, that's just my thoughts, Marco. And I'll go ahead and leave you to go ahead and do your portion of the segment here for your DNA funded challenge. Good Friday, man. The week went by really, really fast, but we have more sessions to come.
Super fast, and Trump always entertaining us. Hopefully there's more tweets coming next week. Thank you, Alan, for the joint segment. I am looking forward to the Monday joint stream, and have a great weekend.
All right, man. Take it easy. Bye-bye.
Yep. See you. Goodbye. I want to post the link to the giveaway form one more time. So it's a jot form. In the comment section, you will find the link. Fill it out, and you'll get entered into a DNA funded challenge giveaway. Essentially, it's going to be a 5K one-phase account. And if you want to get funded, but you don't want to wait for the giveaway, you can use the code A1Live to get 25% off. By the way, this is my personal 25K two-phase funded account. I'm running some profit, finally, around $250. My goal is to get to 300 or maybe 500 and then request a payout. I still need to have some conditions to meet. So I have the waiting period. I have the minimum balance. Okay, when I close the positions, the minimum balance will be hit. and I need to close all open trades. So only this one. I need to wait 3 days, 4 hours more. But yeah, I have 3 positions running. All 3 are in profit, and this challenge is purely traded by ChatGPT. So it has been doing pretty well so far. We shall see how it goes. What's running? CAD yen is running, S&P is running, and gold against the euro is running as well. Yeah, pretty nice. Equity looks pretty good. Looks pretty good. Anyway, if you want to get funded, A1 Live gets you 25% off any DNA funded challenge. Okay, so use the code A1 Live. I've had a great experience so far. There's a big broker behind this company, and they're using TradeLocker, which is, in my opinion, the best software for execution. One more reason why I would wait for maybe $500 instead of 300 is because there's a rule where I think 40% of the profit could come from one day. So if you make all of the profit in one day, you're not going to get the full payout. So I'd rather get 1 or 2 more winning days to meet that rule, to meet that consistency rule. Okay, I'll update you on the situation as it goes. Okay, yeah. So what Max mentioned, the consistency, the profit consistency distribution rule. So I may wait a few more days, try to have 1 or 2 more winning days to spread out the profits. So we shall see what happens with that. Running through the watch list, I have a buy position on oil. Okay. Planning to close it? Maybe. If you're in the A1 Discord, you will get updates on this position. So this was a signal, and if I decide to close it, I will notify you. If you want to join the A1 Discord, get all of my positions, click the link in the description, use the code Marco to get 25% off. So oil, I'm not sure if I want to hold it in case there is an actual ceasefire agreement, in case Iran and the US actually decide to let's say, decide on uranium, decide on the toll on the Strait of Hormuz. But the uranium is the main part. So the Iran still wants to keep enriching uranium for weapons, of course. I mean, like they're saying it's not for weapons. Come on, you need 90% enriched uranium for what? For the science museum? No, you need it for bombs. We shall see. Let's do the giveaway now. Today is the 10th of April. So let me copy all of the names. Copy that. Go to the wheel. Okay. Spin. Let's see. David or Malik. Malik is going to be the winner. So Malik K, congrats on being the winner. I have your contact information, and after my segment ends, I'll send you the link for the free 5K one phase account. Any comments? Let's see. And I think we do have Tiger coming on after me. Let me check that as well. You can find the full schedule for the stream on the A1 website, if you're wondering. No, I'm closing it today. Okay, fine. So this is the full schedule if you're interested. I wanted to finish going through the watch list. I have a Swiss yen position, probably going to hit the stop loss. Part of the game, you know, it's one of those. My win rate is around 45 to 50%. So half of the trades I take will end up as losses. Part of the game. Nikkei running higher, pretty close to those all-time highs. Pretty crazy because this huge move was based on mostly rumors, you know. So we shall see what happens with that. I would try and take a stab at it if we do pull back to the 20 MA. Of course, if the ceasefire develops, if US and Iran go back to fighting, then no, I won't take a stab at it. But if the ceasefire story develops a bit, and if you get a pullback here, I'll be pretty happy to get in, especially with the edge finder pointing bullish. Gold seems to be above the 20 MA, which is good. I don't think it's going to go much lower. I think we found a short-term bottom. I think we hit the 200 EMA and bounced off of that, which is nice. So as the short-term bottom is in, I'm pretty happy to look for buy setups and to participate here. In both cases, in my opinion, gold should go up. In case the conflict, there's an escalation, gold should act as a safe haven. And if there's a de-escalation, gold seems to be acting as a risk-on asset. I mean, from this week at least, or let's say from the 23rd of March, 24th of March, we have been going higher, and gold has been moving in tandem, you can say, with the S&P. So that is interesting. Most Navy ships, especially US, using enriched uranium for energy is the lifeblood of our Navy. Well, that is interesting, but it's all about the enrichment level. For most nuclear power plants, I think you need 10 to 20%. For weapons, you need 90%. Iran currently has 60%, and they're raising it. So if you don't think they're building weapons, I'm sorry, but you are delusional. Just facts. They can go for a ceasefire to restock ammo. That's another possibility as well. The US may have requested a ceasefire to restock their ammo, to bring in more troops, to possibly do a ground invasion. That's why the whole thing is just super, super tricky. Okay. Okay, last question for the day, and then I'll wrap it up. Cycling Club says, Marco, thoughts on a bearish case for USD? Despite having okay data recently, one could argue it has peaked. The recent FOMC document release shows projection for a cooling GDP till 2028. As it stands, at the moment, bearish. The case would be bearish. We have hit the resistance level. Economic data coming out of the US is coming out bearish for the USD, especially the latest inflation print. So that is interesting. The ceasefire is bearish US dollar, as you can see, of course, because the US dollar is a risk-off asset. So if there's a ceasefire, dollar gets sold off. And I think even the Edge Finder, what does the Edge Finder say? If we go to the heat map, US, let's take a look. USD impact is kind of neutral. It was bullish, now it's neutral. Path of least resistance at the moment is down, in my opinion. And I think I even saw on Financial Juice something about rate cuts are still on the table if the situation between US and Iran is resolved. So you may even get rate cuts, which is all bringing the USD down. That's my take on it. That's about it from me. Thank you very much for watching. I will see you next week. I'll be streaming every single day, and I'll be giving away a free challenge, one challenge per stream. So join me next week. I'll be doing joint segments with Alan, which are super fun. I wish you a great weekend. Stay safe and possibly close your positions before the weekend. Goodbye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.